Good morning, everybody. Welcome to August. I can't believe it's August already. Really can't. August edition of the Specialist Mortgage Web Show. For those of you that haven't been on one of our shows before, here's my introduction. My name is Tony Sutton. I'm the Managing Director of Specialist Financial Services Limited. I'm your host for today. I've also just realised how dirty my glasses are. Hopefully you can't see that. A little bit of a bio on myself, just so you know. If you haven't been on one of these before, it's just so you know a little bit about me and how long I've been doing this, which seems like forever. After almost 6 years with a specialist lender and then subsequently a broker, I set up my first commercial and second charge brokerage 34 years ago at the tender age of 25 on the 11th of May 1989. Grew that from a two-man operation to at its peak having 141 employees, which I never, ever want to go through again because I was just a glorified HR consultant, to be honest with you. And it used to drive me mad. But I left in 2004 after a very bitter dispute with my former business partner to set up Specialist Financial Services Limited. And I traded very, very successfully for the following 4 years until the financial crash obviously took all our lenders away, more than anything else, not our clients, but all of our lenders. I've stayed with the market. I don't really know anything else, and I've always really enjoyed doing it. So on the 20th of September this year, it's 40 years I've been doing this, which really doesn't seem possible. In my head, I'm still about 20, but on my body obviously isn't anymore. But 40 years. Not sure if I'll celebrate it or not, but let's wait and see. Claim to fame. This actually came to me. Well, my daughter was over yesterday with my grandkids, and I was trying to think of something that I hadn't covered before. And she said, "What about this one, Dad?" And I'd forgotten all about this. So I was running a football team, a kids football team, as part of a very big club of about 85 teams at the time. And I was asked if I wanted to participate in a charity football match, but I'd have to raise, I think it was about £1,000 in sponsorship. So I thought I'd give it a go. And eventually I raised £2.5 because our lenders were very, very generous to us at the time, as were quite a few of our broker partners. So this charity football match was against an Arsenal 11, which included former players, some academy players, and basically a few famous people. We was totally out of our depth. I think we lost 8-3 in the end, but it could have been 16, it could have been 24 because they did take it easy on us. But I played up front, spent most of the time either flat on my back because I've been tackled and ball taken off me, or then looking at Paul Davis's bum. I didn't want to put bum on this because people might take it the wrong way, but quite literally, it seemed the whole game I was chasing after Paul Davis, who's an ex-Arsenal defender, who was absolutely just out of this world, even though he was obviously way, way past his prime and probably in his 40s or something. And in the second half, unfortunately, he was substituted by a guy called Terry Hurlock. For those of you who know your football, he was ex-Millwall, ex-Thug, probably should have been in prison, but the loveliest guy you'll ever meet. Two pictures I've got, and you might not be able to see these very well. There's me with Ralph Little from the Royal Family, who's probably the best non-professional footballer I've ever seen in my life. And with Luther Blissett, who used to play for Watford, who was a bit of a miserable git on the day, to be honest with you. I played up front with him and he just spent the whole game moaning. But then probably my football ability wasn't what it once was. But that's that claim to fame this time. Nothing too embarrassing. Sponsor for this month, Castle Trust Bank. Big thank you to them, as always, and to all our sponsors, obviously, but big thank you to them. Big part of what we do at Castle Trust. We'll come on to that on our first presentation. If you can't hear or see us, I always say this, but just let us know in the top bottom type your message bit. And Paul Rosa just said, "Morning, the links did not work," so I'll get my team on that straight away. Paul, could you just say which links didn't work, and I will make sure the team actually deal with that and issue something else if they need to. If you are using Internet Explorer, I don't think anyone does anymore, so I'll probably be taking this out fairly soon. But if you are still using Internet Explorer because you've got a laptop that's sort of like powered by coal or steam or something, you will have problems. The sound will go, probably the screen will go, everything will go eventually. And we are obviously depending on outsourced technology. We are very much dependent on things like the weather, which, believe it or not, does affect our broadband here. If it rains, our broadband becomes very, very patchy. Thankfully today I can see, we are blue skies still, so we should be fine. But there are also situations, we've got people all over the country talking today, and if their broadband goes down, you know what's going to happen. You've probably got me trying to fill in for them. Hopefully none of them are presenting from my hotel like the guy a few months ago when the fire alarm went off and he just stood up and walked off. but we are obviously, hopefully, fingers crossed. I would touch wood, but there's none in here. There's only Formica. Everything should be fine. If you have a question, go to type your message box in the bottom right corner. We'll try and get to all the questions we have in the time we've got today. I'll obviously try and make them relevant. And also just try and make sure that if you're asking a question, that we're going to understand what you're trying to say. Because sometimes I look at some questions and think I'm not quite sure what that means. So we have to try and clarify it. So just spend a bit of time on them if you can, just to ensure we're asking exactly what you want to know. Okay, I think Paul's sorted his problem out. Right, okay. Today's specialists, we have Gary Mayer, Lee Williams, Sadie Thorley, and Tony Grillo. We've got 3 banks, Castle, Shawbrook, and Tandem, and one company that probably should be a bank, which is Together. But that's our 4 speakers today. If you don't recognise the names, you probably recognise the logos. So there you go. Covering, as usual, all different topics. And basically, yeah, so you'll walk away from today with a little bit more knowledge on pretty much every aspect of what we do. As always, today's objectives, detailed knowledge of different areas. This is what we're going to try and cover today. We're probably not going to cover regulated first charges too much, because there's something else I really want to talk about. We're going to do a little bit of regulated bridging. There's some ideas and tips for generating more business. There is also something I'm covering in probably about 5 minutes on consumer duty. Some information on future training and knowledge webinars run by ourselves, which are proven to be incredibly popular. And I believe the next slide will probably say, no, it's not, it's the one after this. So today, each one lasts 20 minutes, each presentation, 10-minute Q&A after each session. And speakers have set themselves some questions. So please ask as many questions as you can. Because we don't want to give them an easy ride. I've yet to have a speaker actually not be able to answer a question they've set themselves, but they also do sometimes actually ask a question that's then covered in their presentation. So just make sure you ask as many questions as you possibly can. Feedback questionnaire will automatically be available at the end of today's show. That's very, very important to us, and I'll be covering that a little bit later, just so we know that the speakers are right, so we know the content is right. Are we giving you what you need? These are free, but there's no point in us doing these if you're not getting what you need from them. So it's very important for that feedback. It'll ask questions about today's show and ask you to rate each speaker. Also very important, if you find somebody is particularly objectionable, which is not going to happen today because all of the speakers I've spoken before, then let us know. It doesn't happen very often, but when it does, we make sure they don't appear again. And you will be emailed your CPD certificate tomorrow by 5:30. Check your spam folder if not received. Can't stress that enough. Otherwise, my IT team are going mental, thinking, why is no one getting their CPD certificates? And they're all sitting in the spam. And of course, add us to your safe senders list. So I was talking about the future shows that we're doing. This is a follow-up from the show we did in March with Roger Morris, who formerly Precise Mortgages, now with Tandem Bank. Sales and marketing director, I believe. Can't remember his title. So 60 minutes with Roger. What's really happening with EPCs in 2025? It may not happen. It may happen. We're not entirely sure yet, but Roger's going to be able to fill us in, because let's face it, we can't rely on the financial press to tell us anything that's actually factual in this situation. And try looking on the government websites to find out what's going on. You're completely wasting your time. But he knows, because he's right at the forefront of it, because he's one of the big landlords, because Roger's a very big property landlord that's been asked to do pilot schemes by the government. So he knows, he's at the cutting edge of what's going on at the moment. I urge you to tune into this, because I'm still seeing lots of lenders come out with, get your clients to increase their EPCs now. Don't. Seriously, don't. Not at the moment. Not until you know a lot more of what's going on. You can register at the end of today's show, or of course you can go to our website. It's all on there. Places are limited on this, and I know at the moment we've got well over 100 signups for this. So sign up as soon as you possibly can. And then a follow-up to the most successful show we've ever done, which was back in May, where Robert Sinclair, the CEO of the Association of Mortgage Intermediaries, was talking about consumer duty. And I could tell by basically some of the questions that were being asked and some of the feedback I got afterwards that people really were very, very worried about this, and probably still are in many cases. So this is just a follow-up to basically what's happened. All the stuff that, again, you've got someone who's in the nose at the cutting edge. He's the one who meets with the FCA. He's the one who meets with the Treasury. He's the one who meets with the Bank of England. And so he's the one who knows exactly what's going on. He's got his finger on the pulse. So do sign up for that one as well. Again, you can register at the end of today's show or on the website. You should have received this today. We're going to keep sending this out. We found this very useful, actually, because we all know clients at the moment haven't got a clue. If I have one more client say to me, oh, my fixed rate's going to increase because, or the fixed rate quote is going to increase because base rates have gone up, I'll probably scream, because at the moment we all know base rates. I mean, three of our lender panel that we package for have dropped their rates this morning. It's not the case at all. It's worked out completely. So this actually explains it in some plain English. We just sent everyone a copy of this in case you hadn't received it like directly yourself. Very, very useful. Give it a read, and then next time you have a client, you can maybe take out a couple of bits from it and just sort of try and put them at ease as to what's going on. But we found it to be or my staff have found it to be very, very useful. Our updated guide is available for what we pay you. Should we be doing business together? Very, very important to us that we're completely transparent up front. What we receive, what you receive, and of course, when you get paid, which is always on the day of completion. If you've got your bank details, again, we can show you how to access that later, or just have a search on the website and you'll find it. A little bit on retaining customers. I've actually been doing that. I actually had this slide on since we first started doing these in 2017, because it still angers me to this day that lenders are nicking our business from us, and your business as well, by purely just contacting clients directly and saying, come to us next time. And we have had this with a lender on the day of completion, a very large bank saying to a client on the day of completion, next time you want to borrow money, come to us direct, you won't pay a broker fee. Totally wrong. And they were then intending to pass that deal on to their biggest broker to continue to be their biggest broker. Can you imagine it? Honestly, it's ridiculous. Just make sure they don't opt into marketing permissions at the moment. GDPR has brought in one good thing that I can actually think of. Can't really think of much else, but one good thing in that lenders should adhere to this. And we know how many clients send these things back and they don't complete them. So just make sure with their permission that they are completed, and just write across it if they don't want any marketing contact, no marketing contact. It can't be any clearer than that. And hopefully the lender shouldn't then be trying to pinch the business from you. GDPR to be compliant. We were thinking of actually stop talking about this, because it has been over 5 years now since this started, but we still get these downloads. These two documents still get downloaded from our site probably 20 to 30 times a month, which is quite still surprises me. I know that there's a lot of people who still not done anything on GDPR. I've just urged anyone that hasn't, just download these, tick the boxes, sign it, file it away somewhere, and then if ever anything does go wrong, you've at least got proof that you've did something all the way back in 2018 and also each year since, to try and ensure that you are compliant with GDPR. And this was a document, not document, so this was text that was provided by the ICO. So hopefully it should be correct, but then it is a government agency, so it probably isn't. But I urge you to use them just for your own peace of mind. If you get hacked or something like that, and you've got the ICO and the FCA on your doorstep, and they will be, they'll be looking to see what's gone wrong and can they fine you. You at least got something to back up that, yes, I did do something on GDPR and I have done since. And I think the next slide might be this one. Yes, so Consumer Duty. So I was a little bit reluctant on Consumer Duty because it is very much determined by each individual firm as to what they need to do, what they need to cover. So this was our vulnerable customers guidance that I've given to our staff so that they know exactly what they should be looking for, exactly how they need to deal with it. And I'm not going to take any credit for this. I actually used documentation that was produced by 4 lenders, combined it, and then found out they'd actually got the information from UK Finance, who'd issued this to lenders. Of course, not to brokers who are at the cutting edge of actually ensuring that the vulnerable customers are treated properly and that we're identifying the vulnerable customers, just to lenders. So we've got this. It's free for you to use. If you want it, just type VC into the message box below and we'll get that out to you today. I'm not going to send it to everyone because you might not need it, but if you do need it, and it might be useful to you. As you can see, it's actually got some names on there of some of my staff. It quite simply, that is blank, obviously. I'm not sending one with our staff names on it. And you can then just put your name, sign it, date it, and we pin ours up on the wall. So we've got a compliance wall. And that way, it's just a reminder then just to maybe read it 6 months later, again, just to refresh your memory. And there's your training sorted, pretty much, because it is about as thorough as it gets. I mean, it is a good document. I just condensed it down to 12 pages rather than the 40 pages that we received it. So if you want it, it's yours to use, free of charge. There is a little disclaimer on the back. So if there is any problem in the future, we can't be held liable, because all I've done is I pinched this from a few lenders and just put it into a format that's actually easily readable. But it's yours if you want it. Okay, right. I think there's lots of VCs being put up. First presentation is about to start. I'm bang on time for once. So get yourself comfortable. And the first presenter, hopefully is in the room, which I can see he is, and he's about to appear. And now Simon is going to change the slides. And there he is. Right, Gary will appear anytime. Gary, can you hear us?
I can, yes. Can you hear me?
We can hear you loud and clear. Marvellous. Good morning to you. I hope you're well. Okay, so this is Gary Mayer from Castle Trust Bank. Gary is our, what's the best description? I always never really liked the term business development manager, because BDM, because it's just reminds me of people flying around the country in a car.
You
obviously don't do that. I mean, Gary's our point of contact basically for everything. And I'll be honest with you, one of the reasons we've got such a great relationship with Castle Trust is this man here, because my God, does he work his socks off? He really does. And he's great. We call him, he's not available, he calls back. We ask him to do something, he does it. He is an absolute godsend to us, and as a good business development manager should be. But as we all know, there's some out there that aren't so good, although all the ones we've got today are very, very good. So this is Gary. You should have received on email this morning 2 documents, bridging product guide, because Gary's going to be talking about their bridging product today, and the heavy refurb with drawdowns product, which has just been released very recently. They like to call it exclusive. I think they've probably given it out to a couple of brokers, but it's not just us. So if it says exclusive to Specialist Hub, there might be 1 or 2 others that have got it, but it's not available to the wider market basically at this moment in time. A little bit about Gary. Predominantly operated in the finance sector throughout his career to date. Before joining Castle Trust, he worked as a business manager in a BMW dealership for 8 years. He gained promotion from telephone BDM to business development manager within 12 months of joining Castle Trust, and has now been with them for over 2 years. Gary is an avid Manchester United fan. Can't even say that. Manchester United fan, and he's hoping for a great season ahead. Let's hope not. And his claim to fame is, I'm so lucky that I've got a sibling who really hasn't achieved anything in his life. Whereas Gary's obviously has got a younger brother who is a professional footballer, made his debut against Leicester in the FA Cup. And Gary sent me a video the other day of him scoring his first goal. I'm not sure when that was from, but he scored his first goal, which was an absolute screamer. So to score your first goal in professional, his first goal in professional football, Gary?
It was just on Wednesday past in the Carabao
Okay,
Cup.
so very, very recently, an absolute screamer. I don't think I scored a better goal in that all the years I played football, which was 43 years. So that's his younger brother. So there you go. We won't talk about him anymore. So, but do excuse me. I've got my other phone is just ringing from somebody who shouldn't be calling me. So. Okay, so over to you, Gary. We'll see you in about 20 minutes. Good luck.
Thank you very much, Tony. The payment brown envelope will be in the post for you for that excellent introduction. So I really appreciate it.
That's what you said last time. Let's do it.
Good morning, everyone. And thank you very much for taking the time to join us today. I'm sure you will find the various presentations beneficial. But as Tony said, I'm going to speak to you today about Castle Trust and our bridging proposition. Give you a run through of some structural changes we have internally regards our sort of HR and not HR, but structure of our people, making sure we are set up to provide the service that we need to on bridging, and even touch on obviously some of the products that we offer, and an exclusive product, semi-exclusive, that is available through Specialist Finance. So, see, who are we? Obviously, Castle Trust. We pivoted really at the beginning of the year. We were historically known as buy-to-let lenders, but obviously the market being the way that it was, really led us to need to pivot and become a presence in the bridging area, which we are well on the way to achieving. Essentially what we want to do, and what's sort of an aim from today, would be to make sure that we are on your radar as a genuine option, obviously via Specialist Hub, for your clients. So by the end of today, what I want to achieve is to create an understanding of where Castle Trust now sits in the marketplace, highlight what we can offer, and importantly, what we can't. Look at some key hotspots of our proposition, touching on obviously exclusive products, demonstrate some different options for you and your clients. But as I said, just to reiterate, want to be on the radar for you guys in terms of when you have that case coming in, that Castle Trust are a genuine option to consider. So Castle Trust obviously being a specialist bridging lender. So what do we lend on in terms of short-term lending? So we lend or product-wise, we lend on heavy refurbishments, light refurbishments, commercial to residential conversions, residential to HMO conversions, auction purchases, and development exits. Who do we lend to? That's quite a broad spectrum. We lend to foreign nationals, lend to expats, first-time landlords, and first-time buyers. Limited companies based in the UK, abroad, would certainly be considered. An interesting one which ties in nicely to us lending to first-time buyers is that we don't actually have a minimum income requirement. There must be an income, but we will never ask for or evidence of a certain amount. We don't have that minimum income requirement. So short-term finance, as I mentioned, we pivoted really at the beginning of the year to try and establish ourselves as a presence in the bridging space. Now, in order to do that, we have dedicated resource within the business to have bridging cases as their main priority. So we do have a dedicated bridging sales desk, dedicated bridging underwriters, processors or mortgage administrators, and dedicated completions officers. So there are within the business, there is a dedicated channel for bridging business only. So what we're aiming to do is to have, when a new case comes in or an inquiry comes in, have terms issued within 4 hours of an inquiry. A DIP decision will be fully underwritten on day one. So when the case comes in, we will do it will be underwritten, so that when we issue a DIP, that is essentially us saying, yes, we are committed to this deal. Now, obviously, the underwriting process has got to continue. So what we're saying is, unless any major issues are uncovered, then we are good to go. We are on standard and light refurbishment bridging cases. Our intention is that when that DIP is submitted, that within 4 hours, where possible, we would like to issue an offer subject to valuation. So it gives us, again, looking at bridging and the need for speed and efficiency. What we like to do is to get an offer out so we can engage solicitors. They can start doing their bit. It's typically where time seems to be lost. So we can get them engaged as quickly as possible. They can be doing their bit in the background whilst we look at obviously the underwrite, satisfying requirements, conditions, etc., and getting the valuation instructed. We do look to use title insurance wherever possible to speed up the transaction. Again, everything really does tie into the need to have a smooth, swift process so that we can, with our bridging proposition, deliver what is needed. We do offer dual rep or single rep solicitors on all cases, and it really is down to the client's choice as to how they wish to proceed. But we're quite flexible on that, so we will really be guided by the client as to what they intend to do. So again, going back to getting involved in bridging, we want to obviously be set up so that we can deal with and provide the service that our clients, brokers, etc. do require. What we also want to do is to make sure that our offering is as streamlined and as easy to understand as possible. So tying into that, we do have three separate products and one exclusive, which we'll touch on in a second. But they are, our standard bridge is our first product. So this is ideal for development exits or auction purchase, where we can lend up to 75% gross day one. including rolled interest and fees. So they usually come out about 67-68% net day one for the client. We'd be at a rate of 0.82% per month across all LTVs. Terms anything from 6 up to 12 months. All of our bridging products are non-serviced with rolled interest. So there is no early redemption charge outside of the first 3 months. And if the client were to exit within the first 3 months, the interest charge would be 3 months worth of interest. Loans we can lend up to £5 million based on that pricing, but we will consider lends of over £5 million subject to bespoke pricing. So all lenders obviously have to have lending criteria, but what I will say is there's very little black and white with ourselves. We try and be as agile as we possibly can, and the size of the bank dictates that we can, if necessary, have all of the important decision makers available and on a call quite quickly. So we do actually have one in the morning and one in mid-afternoon case referral calls, or if something is just if we need to think outside of the box and try and become comfortable, if we're looking at a larger loan, we can come back swiftly with an answer and a response as to what we can look to potentially do. So that's our standard bridge product. Moving on, as I mentioned, we have 3 bridging products and the exclusive. So the next bridging product is our light refurbishment bridge. So this kind of does what it says on the tin. The rate is the same as our standard bridge at 0.82% per month across all LTVs. Now, one thing that I always, when discussing this, do hang my hat on is that we can lend up to 80% net day one for the client. We must be within 75% of GDV at the back end. So we're looking at the lend plus rolled interest and fees. So that is the only thing really that could potentially cap the day one lend, but up to 80% LTV net day one with interest arrangement fee, etc. on top of that. Again, terms would be anything between 6 and 12 months. Rolled interest, the same ERC situation with no ERC outside of the first 3 months. 3 months worth of interest would be payable if the client were to exit within those 3 months. And the similar scenario with regards to we can lend up to 5 million on that rate, but we'll consider looking at a case of a larger lend on a bespoke pricing basis, and obviously looking at it at its own merits. Now, with regards to what is light refurbishment, we deem that any works that can be carried out to the property that fall within permitted development. So if it doesn't require planning permission and the works are covered under permitted development, that fits on our light refurbishment bridge. That leads swiftly on to be no surprise that the other refurbishment product we have is our heavy refurbishment bridge. So this is for works that require planning to be carried out. The rate on this slightly higher at 0.89% per month, again across all LTVs. Again, we can and we'll always hang my hat on this, 80% net LTV day one if planning permission is in place at submission. If it isn't, that doesn't mean we can't assist, but we would cap the day one lend to 75% net day one. If planning is to be obtained. Again, we would be constrained. We need to be within 75% of GDV at the back end. But term-wise, we can look at anything between 9 and up to 18 months on the heavy refurb. Again, rolled interest, no ERCs, and a similar scenario with regards to the £5 million cap. We're looking at bespoke pricing for anything above that. But again, to reiterate, where does light and where does what's light and what's heavy? It's all dependent on is planning permission required for the works that are to be done to the property. If planning is required, it will fit on the heavy refurb bridge. If not, and it's under permitted development, it'll be on light refurb. So they were, until recently, that was our bridging proposition. But I think it's fair to say that if you what sort of feedback, all feedback is a gift. Someone, when I first started at Castle Trust, someone once said that to me, who was fairly well established and had been in the industry for quite some time. So if he I'm of the opinion that he knew what he was talking about. I'm sure he still does. But any feedback is a gift and it should be acted upon. So as a result of feedback from our bridging proposition, we have come up with an exclusive product, which is our heavy refurb bridge incorporating drawdowns. So our light and heavy bridges do not cover the cost of works, essentially. So we are covering up to 80% net day one towards the purchase price of the property and allowing the works to be carried out. This exclusive product is there to bridge the gap, I guess, between heavy refurb and development finance. But obviously, us entering into that market or that space where we're able to provide drawdowns to cover the cost of works. So pricing on this product will be at 0.99% per month across LTVs, all LTVs. We can lend up to a maximum of 75% net day one, but planning must be in place at submission. We will cover up to a maximum of £1 million worth of works over a maximum of 5 drawdowns. The term on this is a standard 18 months. Now, obviously, the client can exit beforehand and not be penalised if that's done outside of the first 3 months. But the term will always be, from our point of view, and obviously the workings and interest calculations will be based on an 18-month term. We'll continue to have rolled interest, but the minimum loan size, the minimum day one loan size is £500,000 on this product. Now, what we're seeing and what the scenarios where we would see that this product would work for your clients would be conversions of houses to flats or flats to houses, HMO conversion, permitted development products, and full refurbishments. One key point is that we will not consider part-funded projects on this. We really want this product for it to work as we intend it to. We really want to be involved from the very beginning and work together on that. I just saw, Mohammed, just saw your question there. Do you do regulated bridges? It's only unregulated at this point. Further down the line, that may develop and we open that up to regulated bridging, but currently it's just unregulated. So that is our exclusive product. This is available to, as Tony said, a semi-exclusive. It's available to Specialist Hub. So I would implore you to, if your ears have pricked up there and that's ticking the boxes for some of your clients, to obviously get in touch with Tony or Joe Haley, and they can obviously take details and look to get that moving for you. Now, what we also have here is just a little case study with regards to heavy bridge in particular. So this was an individual applicant where essentially we were looking at two-bedroom flats to be converted to a family dwelling with side and rear extension, loft conversion, and installation of a rear upper and lower dormer. So as you can tell, obviously by the description there, planning permission was required, and therefore we obviously were able to use the heavy refurb bridge here. So the purchase price was 1.83 million. We were able to lend 80%. Let's say gross. We were able to lend 80% net. So I do apologise. Net day one, as the GDV allowed that, we were within 75%. Lend out on day one. The client obviously had the funds there to cover the cost of the works, and we're able to have the facility there in place to allow them to complete the works and then exit at their leisure. Obviously, it was based on an 18-month term. I think in this instance, they exited after 13 months when the works were complete, and were obviously not charged an ERC at all on that basis. So a lot of flexibility there, as you would expect. So that is just, as I mentioned, the run through of how we have structured ourselves and the products that we are offering at the moment. But obviously open up to any questions. I just touched on one there from Mohammed.
You're nicking my job, Gary.
Sorry, getting carried away, Tony.
I'm supposed to ask the questions, otherwise I'll be redundant. I won't be able to do this anymore. So, thank Gary, thank you for that. Great as always. Alex has asked the question: any service payment options if clients prefer service rather than rolled?
As a rule, no. But going back to the sort of bespoke nature and our need to sort of be as agile as we possibly can, if the case works, we look at every case on its merits. So if we needed to be agile and try and incorporate that to make the deal work, we would certainly consider it. We don't advertise we do it. It's not something that we want to do as a rule, but we could look into something of a bespoke nature if necessary.
Okay. And also, because you're working on the net rather than the gross, that would normally mean that clients are quite happy to. Plus, also 500 grand minimum bridging. Certainly on the last product, we don't come across many clients who actually want to make monthly payments on a deal of that size, forking out 5 grand a month. But then you know, occasionally we do. But okay, Neha said, how do you assess affordability for bridging lending?
So bridging, what we do, and this is a key point, I'm glad that you brought that up. We currently would require a refinance exit to our bridges. So what we would look at is the tail end of the lend, so with the rolled interest and whatnot. We would ask for an anticipated rental income after works. Now, we would stress that internally at 5.39%. Now, if we have just a standard dwelling, it's a limited company or low rate tax, would be at 125%. If we're converting to an HMO, or maybe it's deemed wants to be a holiday let, we'd stress that at 145%. But obviously, the 5.39 that we're stressing is not necessarily, it's certainly not our buy-to-let rate, but it's a rate that we feel that we would be comfortable that there is a refinance exit somewhere in the market.
And we can normally find one anyway, the refinance exit.
Of course,
so
yeah.
There's a lot of people who took bridges out in 2022 who've then come to exit and gone, what's happened? Why are the rates so high? What happened to, can I get 3% anymore? No, you can't.
Unfortunately not.
Of course, there's always sale as an exit, and I mean, a lot of lenders don't like that at the moment because properties are, you know, there's problems with affordability across the board. But normally, if we can come to a sensible conclusion, Castle are more than happy to accept it. So, more questions. What we got? Great presentation. This is from Martin. Great presentation. 2 questions. What is the minimum loan size on standard and light refurb?
The minimum loan size is £200,000.
200. And do you lend in Scotland?
We don't. It's England and Wales only in terms of the security location. Not to cast aspersions on Scotland or Northern Ireland. I think it's to do with the land registry laws being a little bit, should we say, different to what we're used to in England and Wales. But currently, it's just England and Wales would need to be the location.
Okay. You were said, do you provide bridging for deposit to purchase investment property?
Yes, we do. If it's what we would most likely want to obviously check the details of where the property is. So again, we would take every case on its own merits. But broadly speaking, yes, we would consider a bridge to raise a deposit for an investment property.
Okay. And Alex has asked, do you take the exit post bridge long-term lending? I think he's saying there, will you then lend on the term?
Yeah, we will consider it. Obviously, we're focusing on bridging in this session today. But yes, we would. It would be a separate lend that we could consider at the time of exit.
Okay, I'm probably just going to ask one of the questions you set yourself. There's no others, and there's no one else typing at the moment. So, where does light refurb end and heavy refurb begin?
Well, again, I think I did. I knew that this question, I'd set this question to the end, and then was conscious that I maybe gave the game away during a presentation. But very much so, our limit on what is deemed heavy and what is light is dictated by, is planning permission required for the works. So if planning permission is required, that is a heavy, in our eyes, that needs to go onto our heavy product. If planning permission isn't required and the works are within permitted development, then it would fit on light.
Okay. And I'd always, a little bit of advice for everyone, I'd always be a little bit wary when a client says, I'm looking at this property, I need to obtain planning, but can you tell me what the rate will be now, what the rate available is? Because we know with planning taken as long as it does, there's always a chance by the time the planning's through, that lender might not be bridging anymore. They might be doing something completely different with the way the market's going at the moment. So it's always a very difficult one because I've yet to see someone who's then got the planning, has come back and has actually got the rate we originally quoted. They're normally disappointed because rates are going up. Why can't I get this? Well, because it was 9 months ago.
This is why the option, or certainly on heavy, if planning isn't yet in place and the intention is to get it, we're giving an option. So, it'd be a slightly reduced day one number, but we can still look at 74 up to 75% net with planning not necessarily in place, but we'd expect that to be granted within a certain time frame. But it's still something that we can look into for you. It certainly wouldn't be a no just because the planning permission isn't in place at the point of submission.
Yeah, just be wary of the ones who haven't even started the planning process yet. Yeah. That's really more my point, is that they're the ones who do come back after 9 months and say, right, I'm ready. Can I have my 0.45% product now? And we're going, it's not available anymore. So, okay, Gary, that's absolutely brilliant as always. Thank you so much. I'll be speaking to you probably at about 1:10 this afternoon once I've finished here today. Great lender for bridging, by the way. I've really got to stress this. The example that was given was actually us that gave Castle that deal. Well, unless it's an identical one that someone else has done, that was us. And we got clients who are absolutely over the moon with the product they got because it was the flexibility. But also, the one thing with Castle is, and we all deal with bridging lenders from time to time, and certain staff members haven't got the experience that they really should have or is really needed to get their deal through, because it can be quite complicated, especially when it comes to things like planning. I've not found anyone at Castle yet who doesn't know what they're talking about. And that to me is an absolute godsend, because some lenders I speak to, I'm almost headbutting the desk when I put the phone down, because you just know this is going to take forever and a day to get through because you don't know what they're doing, quite simply. So, Alex had just asked one question. Actually, that's quite a good one. Is the rate fixed or variable?
It's fixed for the duration of the term, completely fixed.
Dead easy. Gary, thank you very much indeed. I'm trying to string this out a little bit, only because our next speaker isn't in the room yet. So I'm hoping that he might appear anytime soon. But
I can do a karaoke turn for you, Tony, if you'd like.
Sorry, who was that? What?
I can do a karaoke turn if you'd like.
No, you're okay. Your younger brother's got a great voice, so I'll leave it there. Yeah. All right, I'll speak to you later on.
Thank you very much. Take care, everyone.
Simon will remove you from the room. Don't do it yourself. Oh, Alex, fees deducted or added on completion, they're added. That's the lender fees, just so you're aware. That I do know. So, okay, so on to our next speaker, who I'm just looking, and is he there? Or let me just see, is he here? No, he's still not in the room. So we'll try and find him. I will speak very, very slowly. We are a couple of minutes ahead of schedule, so that's maybe the reason he isn't there at the minute. But he's on his way, I've just been told. Right, okay, so our next speaker, we've got Lee Williams from Shawbrook Bank, who has been an absolute godsend for us. Over the past, well, certainly since COVID, he's been absolutely brilliant for us. So you should have received today their buy-to-let product guide. Excellent range of buy-to-let products. We're doing a fair bit of business with this lender at the moment, and we're not being disappointed by what they're coming up with. It's been very, very good. Always tell when you've got a lender that's causing problems, because just the way the staff are in the office, and they're saying, can we just maybe take this lender off panel for something? Because sometimes, and we've got one going through at the moment, an 80 grand bridge, and it's like pulling teeth. It's absolutely horrendous. So is Lee in the room? No, he's still not there. So No, they'll hopefully appear any second at all. Right, so I'm going to introduce Lee very, very slowly. So Lee is the National Relationship Manager for Shawbrook Bank, covering East Anglia and Essex, and us. I'm not sure why, because we're in West Hertfordshire, so we're not actually East Anglia. He's been with Shawbrook for 6 years, and prior to that, he has 30 years' experience in financial services, predominantly with high street banks. Lee looks after 115 brokers in his region, with regulated and unregulated bridging, buy-to-let and commercial and semi-commercial investment mortgages. His speciality is working with brokers to shape large loans to present to their complex deal forum for early stage board approval. And he's still not in the room. So I told you about technology, didn't I? So I'm just going to check, is he anywhere to be found? If my team could just update me, if they would, just on here as to what's happening, because I've got one more slide and then he's supposed to appear. And I'm not doing this. I'm not doing this presentation because oh, his computer is logging back in. There it is. So IT issues. We'll just give him a second. I should let Gary sing that song, really, shouldn't I? Might have stretched this out a little bit. So, is he there? Is he there? Okay, Simon, any more updates for me, please? No, okay, so I'm going to the next slide, but that's then it. I've not got anything else until he comes on board. So, oh, I think we might have just had something. Have we just got something? Is he in? No, he's not. Okay, so just whilst we're waiting for, I'm just going to ask a question. How did everyone find Consumer Duty in the end? What were the? Did you find it stressful? Those directly authorised, obviously. Did you find it stressful? What were your problems that you had? Was there anything that you want to share that I can then sort of chat back next time I speak to Robert Sinclair from the Association of Mortgage Intermediaries and give him some feedback? And is there anything that anyone has? We found it, I mean, it was lengthy. To me, a lot of it we were already doing anyway. I think, in fact, probably 75% of it we were already doing anyway. And we've assessed what we were charging, we've assessed everything else, and we feel we're charging a fair whack for the work we do. Across the board, pretty much. Sometimes, actually, we weren't charging enough. So, as Andrew said, long-winded and a pain. We should all have been doing most of it anyway. Exactly that. To me, it was. I do think sometimes politicians getting involved in this. This was Parliament-led, getting involved in stuff, and then just a blanket rule across the entire financial services industry, even though we're not in the same risk factor or number of complaints or number of basically successful complaints with the Ombudsman as pensions, investments, and everything else. Absolutely nowhere near. But of course, we're all treated exactly the same, which is an ongoing problem. It really is an ongoing problem. But we've still got some rules that really aren't fit for purpose. I had a friend of mine the other day who's got a client who's currently paying 9.6% on a variable rate with a lender. But he can't do a product switch because that particular lender does a level of affordability on the deal. And so he doesn't fit for a 6.7 5-year fixed rate, but he does qualify for a 9.6 variable rate. Work that one out. And that's the stupidity of MCOB. It really is. And a lender that is too scared to actually say, do you know what, this is just common sense and treating the customer fairly. No, we'd rather have him paying another 3% on top of what he's currently paying, because that's what the rules say, because that's what the FCA says. So, right, we still haven't got him. I'm getting really concerned now, because where is he? Where are you, Lee? Simon, if you can maybe just keep me updated. He's waiting for Outlook to open to get the link. Right, okay. So, honestly, right, okay. So I'm going to do his claim to fame. I'm not sure if this is a claim to fame or maybe a claim to stalking. But his claim to fame is, and I've put a picture of this lady up because I didn't know who she was because I don't listen to TalkSport. Lee met TalkSport breakfast presenter Laura Woods, as pictured, who he has a liking for, in brackets, at Cheltenham races. Lee wasn't stalking her, honestly, but bumped into her on a balcony of the very next door box at the very end of the day, having told everyone that would listen that he was going to meet her. Yeah, quite. She now has a restraining order against Lee, and he's not allowed to go within 50 meters of her. So no, that's a lie. I just made that up. Lee's in the room. Yeah, great. Okay, Lee, are you there? Where are you? Click your buttons. Yeah, he's in the room. He's just got to open up his microphone and there he is. Yeah, that's the first bit. No, he's gone again. He's back.
Oh my God, this is so slow.
I know, we can hear you, Lee, so don't swear. Please keep it clean.
Right, sorry about this, Tony. I literally 10 minutes earlier, I logged on and my computer just froze, and now nightmare. But yeah, I heard what you said about me and Laura Woods.
Yeah, exactly. It's the fact you've actually got a caravan parked in the next road to where you live that really troubled me. Now where you now stay. You're the man with the open the curtains with the binoculars, I hear.
Yeah,
So we can't see you, Lee. We can only we can hear you, but we can't. Oh, there he is. Hey, Lee's in the room, everyone. Okay,
so
Lee,
sorry.
I've done your. Don't worry. The wonders of technology. I've done the full introduction. I could have done it 3 times actually, but I've only done it the once. But it's now over to you. So deep breath, sip of water. Yes. I'll see you in 20 minutes.
Okay, thank you. Right. So let me start. Sorry about this. So yeah, so my name is Lee Williams. I'm National Relationship Manager for Shawbrook. I've worked for Shawbrook for around about 5.5 years now. So I look after BDM, who covers Northern Scotland, and also East Anglia and Essex, which is how come I look after specialist mortgage services. So I'm going to just give you a little bit of background about Shawbrook, and then talk about specifically the buy-to-let market and our products in buy-to-let. So for those of you who haven't come across this before, Shawbrook are a specialist UK lending and savings bank. We've been around since 2011, so we proudly celebrated our 10-year anniversary a couple of years ago. We've significantly grown over that time as a business and as a bank. So we have a consumer division that looks after savings and a little bit around personal loans. We have a business finance function that looks after asset finance and traditional business finance. And then predominantly we are property lenders. So I work in the property division, and we lend via our intermediary panel to property investors, professional property investors. So our vision is to provide your client's vision, or deliver your client's vision, providing practical and creative funding solutions that are enabled by advanced technology, although not including my laptop, I would say, at the moment. Since 2011, our property-related loan book has exceeded 5 billion, but that was at the end of December 21. I think it's probably nearly double that now. So in terms of Shawbrook and property finance, our marketing team came up with this wonderful slogan that we put the pro into professional and the pro into property finance. Not sure how I feel about that, but that just is kind of our mission, really, is to help professional property investors with their dreams and ambitions. So we pride ourselves on our technology-enabled and service-focused approach, supporting investors with innovative product range that has professionals in mind. So we do buy-to-let, we do bridging, we do commercial investment, and we do development finance. And we work really closely with our partners in the on our intermediary panel across the UK, and our broker partners are an integral part of how we do our business. So around about a year and a half ago now, I would say, we invested a large amount of money. I think it's something like £4 million into our application portals to make them seamless for our brokers to be able to submit business to us. So we started off with buy-to-let, and we've now rolled that out across bridging and commercial. So it uses advanced decisioning techniques and also integrates with external agencies so that we can give meaningful indicative terms very quickly, requiring minimal input and information from our brokers. So all three portals will calculate the maximum loan that we can provide. It will try to provide automated valuations where the property qualifies for it, and it will do all of that before you've actually gone and run hard searches on the client. So you can see at an instant how much we could lend based on the property type, the rental income, and the confidence rating that we've got in the data behind it. It also integrates with Companies House and HomeTrack. So with Companies House, if it's a limited company application, you literally just need to put in the company number or the name, and it will pull through all the information from Companies House around the directors. So you don't have to manually input all that information. And for portfolio refinances, it literally will pull through all the data from Land Registry around borrowing or properties that are registered in that entity. So imagine if you've got 100 property portfolio refinance, it won't make you enter each property individually. You can just untick the ones you don't need. So it's a really innovative, quick and easy application tool that we're really proud of. This slide just shows some of the awards that we've won over recent times in terms of industry awards. But yeah, the main subject really today is around buy-to-let. So as I mentioned, why do specialist mortgage services or special financial services work with us? Our frictionless digital journey, which I've kind of alluded to with MySurebrook. We've also been one of the founding UK lenders that are signed up with PEXA. So for those of you who don't know, PEXA is the way that Australia does its conveyancing. So it's fully automated. It's all done at the push of a button. So instead of the current scenario where we employ our solicitors, we get our solicitors to converse with the borrower solicitors or the lender solicitors. We send out a complete certificate of completion on the day of completion, and the money then goes to our solicitors to send to their solicitors. Unless it's done by 1:45, it's probably not going to complete the same day. Well, PEXA is this automated system that Australia does 98% of their mortgage completions this way, and it's all done at the touch of a button. So we've started this with really simple refinance transactions on simple assets with an individual applicant rather than limited company, and it's going really well. And it's being rolled out further and further as more lenders sign up for it. And then we'll be able to roll it out to limited company and more complex transactions as we move forward. But it's really good to be involved at an early stage. And again, it shows our commitment to being innovative and trying to sort of disrupt and change the way that things are done. And the UK government, I think, is keen that this becomes the way that all mortgage transactions are completed. We can do large loans up to £25 million for single applicant exposure. We've gone beyond that with clients that we know and work with for a while. So we've got exposure beyond that with certain clients. We can create innovative funding solutions. So things like mixed portfolios we can look at. We have very transparent and clear lending criteria, which is published on our intermediaries website that everybody can access. So there's not sort of any secret criteria that underwriters underwrite to. On certain properties, we can use a yield-based valuation approach, so large HMOs, for instance. So whereas you may see some lenders in the market that are able to consider valuations on HMOs up to a certain number of units, we don't have a limit on the number of units. And if it's a large HMO and the valuer says it's appropriate, we can use yield-based approach to get a better valuation potentially. We also offer an energy efficient discount on our buy-to-let mortgages. So if a customer has got an EPC rating of between A and C, then we give them a discount between 0.25% and 0.9%, I think it is, off of the arrangement fee. And also, if the customer can evidence during the term of the mortgage that they've improved their EPC, then we would rebate that percentage of the arrangement fee back to their account, or they can pay it off the loan if they choose to. In terms of our rates, these are our up-to-date rates. So on our digital buy-to-let products, so these are the ones where it passes automated valuation, where it's a simple asset like a single dwelling house, or a single flat in a block up to 5 stories, or even a small HMO up to 6 occupants. Again, where it passes the automated valuation, they'd qualify for the digital product. Those rates are at 6.49%. And our more complex products, so anything that doesn't pass AVM or is a more quirky asset, would go on to our complex product. The 6.39% is over £1 million. So rates below £1 million are a bit more expensive than the 6.49 on the digital product, which is nice and quick and easy. In terms of the market at the moment, I just kind of wanted to touch on where we find ourselves really. So as we all know, rates have been going up and up since the Liz Trussonomics scenario in November. Swap rates have gone through the roof, so we've seen borrowers have to react and put their rates up. Base rate increasing for a bank like us, where we predominantly fund on against our savings. We're obviously having to pay more money out on interest. So I think we've got easy access interest rates at about 4.25%. So that means that our cost of funds obviously instantly goes up as well. So we find ourselves in an interesting market at the moment, and we're seeing the small kind of portfolio landlords potentially struggling if they're highly geared, struggling now if they're coming out of 5-year fixed rates that they took when the PRA requirements came in 2017, struggling to meet the debt service coverage requirements, maybe considering selling assets or actually pulling out of the market altogether. And then your large sort of portfolio landlords, we're seeing if they're lowly geared, potentially them being able to snap up those kind of opportunities. So we're not seeing so much in kind of new business in terms of purchases, but definitely in terms of refinances and people coming off fixed rates, we are seeing quite a bit of activity with that. And as I say, with our digital product, it can be really quick. So we can get to formal offer on a digital application when it passes AVM within 24, 48 hours. And we've seen, I'll share a case study in a minute where we can complete on application to completion within about 7 or 8 working days at the moment on those easy sort of simple buy-to-let applications. So yeah, interesting market on the buy-to-let front. As I say, we're kind of seeing a fluctuation between the simple stuff that flies through and then the more complex, larger loans where people want to refinance their whole portfolio because maybe they're with a lender that was on a variable rate and now all of a sudden they now want to take a fixed rate to get certainty and maybe even a longer term fixed rate. So you may have seen in the market over the last week or so, we've announced 2 new products. So we've got a 2-year fixed rate now. So if somebody just wants to lock in a fixed rate for a couple of years and then review when hopefully things calm down, then we can do that. But we've also introduced a 10-year fixed rate, which we've seen inquiries from some portfolio landlords where they just want to lock it away for 10 years, not looking to sell or do anything with it other than just forget about it for 10 years. So we can offer that option as well. Although whether at the current sort of maybe peak of the rates, 10-year fix is the right option or a popular choice remains to be seen really. The below slide just shows some of our scenarios that we can consider. So as I said, we can do single let residential houses and flats as you would expect. We're never going to be the cheapest in the market at that end of the market, but I think the big selling point for us really is that digital journey where we can be really, really quick. We can do the more quirky flats above commercials. So if there's good demand for the flat to be let or sold, then we can consider those. So even above smellers like takeaways, again, providing it's a good location with good demand and positive value or commentary, then we can do that. We can look at mixed portfolios, as I mentioned, so residential, commercial and semi-commercial. We can look at multi-unit blocks of flats, and we don't have a limit on the number of flats in the block. And also multiple flats on a freehold title, again, no limit on the numbers. Same with HMOs, we can do large HMOs with no limit on the numbers. And purpose-built student accommodation, we've just done a really large PBSA in Durham, which was, yeah, we've still got appetite for those kind of assets as well. This is a couple of case studies. So this one was an £8.5 million portfolio refinance that we did on a 5-year fix. £11 million portfolio. There were 63 houses and flats, and they wanted to release capital to facilitate further purchases to expand their portfolio. They went to their incumbent lender in the high street who weren't having any appetite to do these kind of deals at the moment. But because we could understand the complexity of the client's needs, built the relationship with the landlord and our underwriters and our relationship managers, we got comfortable with it and we were able to assist with that one. And at the other end of the spectrum, here's another case study where we managed to get a digital buy-to-let case over the line in just 6 working days for a professional landlord. So the deal came in. We submitted, the broker submitted it on the portal. They got their formal offer within 24 hours. Because we can use title insurance for refinances such as this, we only need to instruct our solicitors, which the broker uploaded the only condition, which was the online application form that the client doesn't have to sign. 48 hours to get to formal offer. And then we completed within 6 working days on that from start to finish. So yeah, it's a really good, quick journey there. You can see Tony has reappeared, which is good timing because
Any questions?
Is my last slide.
There we go. Lee, you're an absolute superstar for getting that time back. So thank you. I'm going to buy you a microphone. So you don't have to hold your hand up like this the entire thing. So not a problem. Okay, so we've got a few questions.
Yes.
Andrew has just asked the PEXA Australian situation. Brief explanation, please, again, as to just what that entails, what that means, what it is.
Yeah, sure. So it's an online conveyancing tool that, as I say, 98% of Australian mortgages are completed that way. So it relies on all lenders being signed up to it, and rather than the current merry-go-round of going to the borrower's solicitors, they then go to the client solicitors then go to the lender's solicitors, and it all takes a very long time to get done. It's all done on one portal, and at the time of completion, press the button and everything happens instantaneously. So effectively, when it's fully up and running and rolled out, we should be able to do same-day refinance completions, which is amazing. So as I say, it's very early stages. There's a handful of lenders in the UK that have signed up for it at ground level, and we're one of those. And as I say, at the moment, we're able to do very simple transactions with it, such as refinances for individual applications. And yeah, we've done a few now, and it's starting to pick up momentum. And as I say, I think it'll be the UK government's keen that this is the way that all lending transactions are transacted going forward. So I think there's some high street banks that they're talking to at the moment. But yeah, you can Google them, PEXA, P-E-X-A. It's really interesting. So yeah, we're proud to be involved in that.
I just did actually. I was reading it when just as until we finished.
Hopefully,
so yeah,
I explained it.
Does look very interesting. Anything for me that means there's less solicitors involved, absolute godsend. Because as most of my job at the moment is dealing with absolute clown solicitors who really should not be practicing law at all. They really shouldn't, because they haven't got the common sense they were born with.
The last year,
it's horrendous sometimes. Right. So Mohammed's asked, do you work with directly authorised firms, or does he have to go through a packager? Well, obviously, I want you to go through a packager. Come through us. But I don't know. I don't know whether you're taking new brokers on. I don't know what your situation is.
Yeah.
Sure.
We don't have an open panel. Our panel is closed. So initially, if brokers approach us and they're directly authorised, we would put them through one of our packages, such as Tony's company, so that you get to understand how our criteria works, how our processes work, and that it's a good fit for each other, really. But as I say, Tony and brokers like him do a great job in terms of getting, especially in the current environment where everybody's really, really busy. They understand us. They work with us really closely. They know our products. They know how to get cases through, and it's a much more seamless and painless journey going that route, I would say.
And there was a reason when Shawbrook launched, it wasn't actually called Shawbrook, it's called Whiteway Laidlaw Bank, that we was broker number 3 that they approached.
Yeah.
There is a reason for that, as you can imagine. Yeah. So that was a long, long time ago. Okay, Kerry has asked, what is the minimum loan?
It depends on the product. So currently on bridging, it's 50,000. On buy-to-lets, our minimum loan is also 50,000. On semi-commercial at the moment and commercial, we've got restricted appetite. So on semi-commercial, we're currently at 500,000, and on pure commercial, it's 1 million. I think there might be some changes coming on that front soon. But yes, we need it. We need it back. Yeah,
really is needed for the commercial market, especially at the moment.
Agree.
We need you guys back in the game. Yeah. Andrew has asked, regards to the refund of part of the application, the completion fee for EPC improvements. How many years does that last for?
Yeah, that's a good question. So it's for new deals. that were submitted since we launched this initiative, which I think was last May. So anything that's been submitted since then should qualify for it during the term.
So it's the whole term, mate. So somebody got a 25-year term, and after 10 years, improve, and then they would get some dough back.
As I understand it.
Okay, great. Oh, hang on, we've got questions coming through. So the question I was reading has just disappeared up the screen a bit. Martin has asked, do you lend on holiday lets and
service
SA
accommodation?
properties? I'm trying to work out what SA is in my head because I've got South Africa in my head now and I can't think of anything else.
Service accommodation.
That's the one.
Yeah, we do. We've got, again, limited appetite really. So for a holiday let service accommodation, it's a single dwelling house or a single flat that rather being let on an AST is let as on short-term lets. But we will use the equivalent AST income. So it needs to have demand to be let on an AST basis. And that's what we'd use for the affordability. So it can't be a purpose-built serviced accommodation on a holiday park or something like that, or holiday let. It needs to be a property that has demand to be let on an AST basis.
Okay. Last question we got from Martin. Do you lend to foreign nationals and expats?
Yeah, we do. So expats, they need to have one UK investment property already and 50,000 equivalent income. Foreign nationals, we can consider if there is a UK national as part of the deal as well that's a majority shareholder. So if you've got if it's a pure foreign national application, then we couldn't consider that. But if you've got two parties, one's a foreign national living abroad, but there's a UK party that's 50% more shareholder, then we can consider those.
Great.
So the difference between the two, expats are UK national living and working abroad. Foreign national is somebody who's living and working abroad and born abroad as well. Yeah.
Lee, fabulous. Thank you for getting the time back. Really appreciate it.
That's okay. I'm so sorry about the beginning.
Don't worry. Get your laptop, drop it on the floor, and tell head office it was an accident. Sorry, this isn't being recorded. No one will know. So, all right.
Thanks, Tony. Thanks.
Speak to you soon. Simon will take you out of the room.
Okay. Thank you.
All right. So we'll see you soon, everyone. What we're going to do? We're going to reconvene at 11:20. So we've got about 8 minutes now for a quick comfort break. Right, everyone. We're back. It's gone 11:20. Let's get yourself comfortable and introduce our next speaker, who is Sadie Thorley from Tandem Bank, who will be talking about second charges today. You should receive their product guide this morning, along with all the others, just to give an idea of exactly what they're able to do, what LTVs are able to go to, etc., and all the loan amounts. But Sadie's going to explain all this, obviously. And there she is. Sadie, can you hear us?
I can't hear
you. You can't hear us, or you can hear us? No. We can hear you. Yeah, we can hear you. I did say about technical issues, didn't I? But can you hear us?
I can't hear anything.
Right, Simon, can you sort out?
Can you hear me?
We can. There you go.
I can't hear anything, Tony.
Okay. All right. We'll sort that out.
Sorry, guys.
Don't worry. There's more technical. I don't know why that is.
I'm going to have to see if someone can help me.
Okay.
She's off.
Okay. She's just off to check to see if someone can help. So I will. Okay. Someone's coming to help. So right. Anyway, I'll introduce Sadie, shall I? So Sadie is a dedicated key account manager specialising in
sorry, guys. I can't hear anything.
Second charge arm with a background in surgical nursing and restaurant management.
Okay.
Okay. Here comes
There's
IT.
always something, isn't there?
She can't hear us. Doesn't realise I'm actually trying to
introduce
introduce
her. Because from a double screen.
Can you hear us at all?
I can hear you now.
Perfect.
So sorry, guys. There's always something, isn't there?
What we do about IT? Hi, Sadie. How you doing? You right?
That wasn't even IT, to be honest, Tony.
Oh, wasn't it? Okay.
No, helpful people.
A man with a small beard. Normally they're in IT, so and a t-shirt. Normally in IT. So.
Very true. How are you?
Yeah, all good, all good. So I'm just doing your introduction. So with the background in surgical nursing, that's the first on us for us, and restaurant management, Sadie joined the company in 2016 as a trainee BDM, quickly excelled in her role, earning a promotion within a year. Oplo, which is what the second charge arm is sort of known as now, formerly known as First Stop, received substantial funding from Pollen Street Capital. Sadie witnessed the company's rebranding and expansion of lending capacity. Now as Tandem, Sadie's 7 years of experience has solidified her industry knowledge and nurtured strong relationships, enabling her to provide exceptional service. Outside of work, Sadie cherishes her role as a mother to 2 young children and is pursuing her dream of building a home on a mini farm. Do you own a mini farm, or
We do. We bought a 400-year-old derelict farmhouse with about 3.5, 4 acres around it. So I've actually been living in a static caravan now, Tony, for nearly 4 years. And we've nearly got the planning permission. We've just got one condition to satisfy before we can start to build. So it's been a whirlwind, but it's going to all be worth it in a few years' time when I've got my dream home.
Fabulous. Well, if you needed any heavy refurb bridging finance, our first presenter today has got exactly the product for you. So therefore, although that kicks in at 500. So anyway, so I on to Sadie's. Oh, I've gone too far. Clicked it twice. Claim to fame. Sadie's brother, I had to Google this because I'm old, toured with the Cortinas as their support act for 2 years. I didn't know who the Cortinas were because I did own
this
in 1980. But that's about my knowledge of Cortinas. Apparently, it's a very, very famous group that I'd never heard of. So there you go. Sadie's brother, tour with the Cortinas. So, Sadie, it's over to you. I'll see you in about 20 minutes. Good luck, and I hope everything goes okay.
Thank you. At least I can hear everything now. So, hello, everybody. Thank you for that introduction, Tony. So, I'm using my 2 screens here. So, just to let you know what I'm going to be talking about, we're going to have a bit of an introduction into Tandem, who we are. A little bit of a touch on the current market and how actually in the current market you might find potential opportunities for second charges and also general opportunities that are out there for people that might qualify for a second charge. And then obviously onto Tandem's products, our USPs, a little bit on affordability and the future plans for Tandem. So firstly, just to tell you a little bit about Tandem. So we are one of the UK's leading providers of consumer credit, and we serve the millions of people who we feel are being left behind by the mainstream banks. And it's our purpose to, get finance for these hardworking people to create a better life for themselves. We believe that people may go through ups and downs in life, and it's a fair way for consumers to borrow and have a real understanding of what's going on in their life. We like to call what we feel is that the new mainstream will become online fintech banks like ourselves, and we believe that rather than the high street banks, these types of banks will become the new mainstream, and the new mainstream of customers is likely to change over the next year or so with things that are obviously going on in the market. We also have a really green focus and a strong environmental focus where we do on our website, we give customers tips on how to, hold a greener lifestyle, improve the energy efficiency of their property. And that's a really, really strong belief of ours. So firstly, going on to, what's been going on in the world, I'm sure you're all very aware of what's been happening. We did go into financial turmoil in autumn 2022. And although second charge lending volumes do remain subdued, we can start to see some recovery. And what we do predict is actually by the end of 2023, we will finish, in a greater position than we did in 2022. So we're still expecting to see some growth year on year. I suppose, because of what's going on in the market at the moment, we've had the hike in energy prices, we're still, battling with the cost of living, inflation, etc. The outlook for the rest of this year does continue to focus on borrower affordability. And the main drivers of that is obviously cost of living, hike in energy prices, etc. What we do know is that since 2021, over 1.6 million people have experienced some sort of blip on their credit file. And this is also, again, it's following on from what's happened. It's potentially only going to become more and more common to see this. And it actually takes the total of people with adverse credit to around 8 million. There's a growing number of people with missed payments now in the last 6 months. This indicates that the number of consumers with adverse credit is growing and is likely to continue to grow. And I suppose what I'm trying to say is if you factor in that growing number of people who need to consider debt consolidation, or potentially they need to consider that they are taking multiple income streams now to combat the cost of living, it's very clear to see that customers with specialist, if you will, specific circumstances are going to continue to grow in number. And at Tandem Bank, this is, what we kind of call the new mainstream, so the new normal type of customer. We also know that research also revealed that consumer debt rose by a third in 2022, and that 4 in 5 adults entered 2023 in debt. Again, this is to do with the cost of living increase, higher bills, and we know that going into 2023, the average adult's debt actually rose by just over £8,500 last year. So from what's going on in the current marketplace, I think it's important to highlight that there are opportunities out there for second charge loans. There always has been. And I think I'm quite lucky in the sense that I didn't come in the industry till 2016. And I'll be honest, I had no idea what a secured loan was, second charge, whatever you want to call it. So I had none of the perceptions that I know many people do still have today. And they can be quite bad perceptions of a second charge. Some people call them a dirty product. I had no idea. So I've never had that perception of the product. Always thought it was a wonderful product. And I think it's also an education piece, that it isn't all about high fees and high rates. And it was quite a flat market back then. Whereas it very much today, it should be a really useful product that you can use to help your customers. And obviously, in effect, help yourselves by, having that in your toolbox, if you will. So I suppose that leads me quite nicely into, the potential reasons why, you might pick a second charge for your customer, why it might be the best advice in the current situation. There's been quite a few informative studies recently, and it's always been a hot topic that second charge mortgages aren't widely available to people through high street lenders. So it's really important that these customers do discuss their circumstances and any borrowing requirements they may have, with a specialist broker. No matter how big or how small that requirement may be, it's so important that they go to a qualified mortgage advisor. It might be the potential that mortgage advisor goes to a specialist second charge broker to understand that how a second charge may well work as a practical and suitable funding solution for your customer. And I suppose what I'm trying to sort of hit hard on here is that if you don't offer this, that customer 9 times out of 10 is going to go on Google, do a little search, and that is where they will then find the appropriate solution. So it's education and it's awareness on the myriad of effective solutions that a second charge mortgage, can actually bring. They can be a really popular solution, for those that cannot or should not remortgage at present. You've got people that have fixed previously that are in 5-year fix now on a rate that's obviously a lot lower than what we're on today. It's been going up so quickly. It could be that they've got huge ERCs. We've got the fact that people might want to do home improvements, but the personal loan that they've seen on the internet, they can't spread the term enough to afford it. They can't actually, borrow the amount of money that they do need, because obviously unsecured loans are a lot lower than what we can offer in the second charge market. There's all these reasons why a second charge might be the best solution for your customer. They might want to do home improvements, refurbishment, extensions. Mainstream lending products may be inflexible. They might require greater levels of questioning, affordability. And however, a second charge can provide your clients with a sensible, suitable option for this. And that might be that it is harder from affordability. They have got some blips on the credit file. They have got 2 jobs because they're battling the cost of living. So I'm not saying, a borrowing for debt solution might be suitable for everybody, but there's clearly, from what we know from the research, there's clearly a large cohort of clients where a second charge may be the best thing for them. And again, this is where a specialist broker like yourselves is pivotal here. from a consolidation approach, it needs to be well researched, well structured, and obviously wholly suitable for the client. But most importantly, customers want this delivered with minimal friction, and it might also be in a timescale that suits and benefits the client. Obtaining funds in a different way may take a lot longer than it can coming for a second charge. And I suppose really that leads me quite nicely onto the fact, that we are quite lucky that we are one of the biggest second charge lenders in the marketplace. And I can only obviously hand that down to the fact that we have got some great USPs. We can offer customers funds in a very quick timescale. And I'll go on to mention now some of the reasons why potentially Tandem might be, the best lender for the situation for your customer. So we offer a real day one rate decision. So what I mean by that is providing your customer every blip they've told you, if they've got mortgage arrears or if they've got default CCJs, providing that information is on the credit search that will be available on the portal, and it's come through, nothing's missing that they've told you. That will be the rate that the customer receives, and that will be the rate that continues through. We're not going to then get the deal in and say, oh, do you know what, we don't like this, we're going to give it a higher rate, anything like that. I'm not saying, obviously, if you were to, increase or reduce the valuation on the property, that wouldn't change the rate. But what I'm saying from a credit profile point of view, that rate that you see day one will be the rate that the customer continues to have throughout the process. We're also quite, great in the fact that we can offer people loans if they have got multiple income sources. We can accept benefits, we can accept second job, providing it's sustainable. We also can help people if they've only been in the job for 1 month. So it might be that you've got a teacher, head teacher, nurse, changing hospitals, changing schools, etc. And providing we can evidence that they've been employed for 12 months with continuous employment, and you can evidence it's similar role, similar industry, they've only been in the new job for 1 month, we can still help them then as long as they've been in for 1 month. We offer our products up to a maximum LTV of 95% loan to value. So again, there's not many second charge lenders out there that will help people to that loan to value. We can also help people on a third charge basis. So what I mean by that is potentially customers have already got a second charge, and there may be ERCs on there, or it just might not be beneficial for them to obviously consolidate that second charge. So sometimes it's people that are potentially, they're doing home improvements, the bill gets run away with them, it might be the wife wants an extravagant kitchen, they haven't planned for it, they need to then get some extra money to finish off these home improvements. So we can actually then sit third ranking on the legal charge, up to £100,000 maximum. This is also really beneficial for when you've got customers who have got shared ownership properties, because obviously in effect when you're looking at that land reg, there is already 2 charges on there. So there is a product out there to help people in shared ownership, and we can then sit third charge for them and help them. We also lend in Northern Ireland up to a maximum of £50,000. Now there's only a couple of lenders that lend in Northern Ireland, and we do well in Northern Ireland. So if you do have any customers or potentially come across any customers in Northern Ireland, we can help them. We can also secure on a consumer buy-to-let, so it doesn't necessarily have to be the residential. It does have to fall into the accidental landlord category, so inherited it, lived in it themselves, close family member lived in it, and then we can help those customers up to a maximum of £50,000. As I slightly mentioned at the start, we can help people with mortgage arrears, we can help people that have got CCJs, that have taken payday loans, defaults, etc. As I mentioned at first, as long as that information has come through on the credit search, we're aware of it with our scoring in the background, that means that we're happy with that, providing obviously explanation, rationale, stacks up with the why that's happened, what's happened in the life, tell us the story. We also accept AVMs on the majority of our loans. So as I mentioned previously, from a speed point of view, you don't have to wait for the valuation to come in. We provide all of our brokers with their own logins to home track real-time valuations. We pay for that. So, at point of sale, you can do the valuation. That's not going to change, providing it obviously fits in with our criteria for confidence levels, which is a minimum of 5 or 6. And that nothing's going to change because, it's okay going off customers' estimations, but once the valuer gets out there, sometimes it can drop by 10,000, 20,000, and then you've got to go back and resell that because obviously your loan to value has changed. So it just makes everything a lot, slicker, smoother, and better for the customer. We also don't have a minimum house valuation at all. So where our office is based in Blackpool, you can actually still find houses that, are up for £70,000-75,000. I know that's going to be a very different story down south, but, we still do come across this. So we have no minimum house value whatsoever. We also have no restrictions on construction type for flats or for obviously the buildings. So it can be made out of wood, timber frame, it can be tin roof, thatched roof, whatever. We are not bothered at all. There is no restrictions at all. Same with flats. So it can be on the 13th floor, it can be above a shop. Again, we have no restrictions there whatsoever. So it's a great product in that regard. We can also secure on ex-council, ex-local authorities properties, and we actually do ignore the preemption period. So, there's lots of opportunities out there why Tandem potentially might be a great lender, for your customer. We are a great lender, but you know what I mean. We can also do majority of our loans no consent. So obviously, the reason we can do this is the type of charge that we put on there. So we put what's called an equitable charge, a unilateral notice on there. It's not a full secured charge. So that's how we can get away with actually putting them on without consent, because you only need the consent to register a full charge. So there are still lenders out there who decline consent, and there are still lenders out there, obviously, that take the time to get back to you to say, yes, I do consent to a second charge, third charge, etc. So again, just to hit home from a speed point of view, and from an ease of the customer, it's not nice waiting around, is it, thinking, I've got to wait for the consent. It could be 2 weeks. I don't know if I'm going to be approved yet, if it's going to be underwritten and I'm going to qualify for the loan in the end. So it's just smoother, better for the customer. We can also help people that have only got 1 month mortgage history, which is an absolutely fantastic product for first-time buyers. How many people buy a property, especially when it's your first property, you get all excited, you might want to put a new kitchen in, new bathroom in. It might just be the fact that you just want to put new carpets down and put, your own stamp on it with a lick of paint, etc. And obviously they've just got the first mortgage, so it might be the fact that they start racking things up on credit cards or personal loans, etc. However, as long as they've been in the property for 1 month, made their first payment, we can actually help them then on a second charge basis, which, it can be more manageable for customers. It makes sense if they are doing home improvements because it's secure to the property and we're going to be increasing the value of that property. So again, people sometimes think that first-time buyers can't get help in that way, but obviously we can help them. Another, slight USP of ours, I'm not saying it's groundbreaking, but we can help people that have only got 25 years remaining on the lease term. So it might be the fact that this customer needs money to increase the lease term on the property. They can kind of be stuck in a little bit of a rut, if they've not got the 99 years, 90 years, what other lenders would want in order to help them. So we are happy to do that, providing there's 25 years left on the lease term. We also offer customers who have got an EPC rating on the property we're securing on, between A and C, we offer them a day one rate discount. So what you would do in this situation is you would go on our website. There's a link there to check what the customer's EPC rating is on their property. If it does come back as an A or a C, you can get in touch with our broker support team, and they will instantly add that discount onto the rate. which not only is fantastic in terms of, obviously, it's a talking point with customers, isn't it? Some customers, may not even know what their EPC rating is, may not even know what an EPC rating is. And you also may get customers out there who are actively wanting to, get a better EPC rating. So it's a great talking point with customers. And obviously it's great to get a rate reduction, and it just puts, it just puts a bit of a good talking point, doesn't it, as when you are speaking to your customers. Another great thing from Tandem is we can offer copies, so we can accept copies of all documents. So again, tying into the speed thing, it's all about speed, it's all about ease for customers. They can screenshot things, they can fill the application form and sign it, take a photograph of it, send it to us that way, or to yourselves or to Tony. They can take pictures of the wage slips, ID, everything like that. The only thing that we actually need a wet copy of is the legal charge. Sorry guys, I lost the screen then for some reason. So again, tying back to the speed and ease of things, we really can help people really quickly. In terms of sort of basic criteria, so we offer all of our loans are fixed for 5 years. We don't have an ERC as such. The ERC for us is up to 2 months worth of interest. So providing on what day the customer decides to pay us off, depends obviously on how much interest that they may have to pay. So up to 2 months of interest. Customers can also make overpayments at any time at no extra cost. You can just, give our collections team a ring, make a payment, no charge at all. We can lend to a maximum, as I mentioned before, 95% loan to value. So you are capped with the different loan amounts. So if you want to borrow 50, you're capped at 95, 75 is then capped at 90, 150, 85, and then obviously you can go up to 250,000 at 75%. Minimum loan you can get with us is 5,000, and we do lend all the way up to 250,000. Our lender fees are anything below 10,000, it's 495. Anything above is 1,295. Now, obviously, that incorporates the fact we, pay for all the legals, pay for the home track valuations, credit searches which are available on the portal to be viewed, and the fact that we don't have disbursement fees, we don't have harsh ERCs in the background. So that's the reason why our lender fees are what they are. You can charge a broker fee of up to 12.5% of the net loan. We offer terms from 36 months all the way up to 300 months. In terms of minimum age and max age, so they have to be 21 years old in order to apply for a loan with us, and the loan has to be paid off by the time they turn 70. And then just to give you a little bit of detail on the third charges, so if you're over 75% loan to value, it will be capped at a maximum of 50 on a third charge. And then obviously if you are below the 75, you can have a maximum of £100,000. And then in terms of how we assess affordability, so we have a standalone document, income and expenditure on every deal, full I&E on every deal. We don't require bank statements on about 95% of our cases. What we do is we hold ONS data per household for food, social, clothing, utilities, etc. So all that part of your expenditure is already it's already in there. You can't change that. And then it would just be applying things such as council tax, any extra things that they may spend. Is it school fees, childcare, etc. The I&E is really easy to use. It works on a traffic light system. So if you are green, obviously it means you're good to go. If it's showing amber, it means can you refer that into us? Let us have a look at it, because it's sort of on the borderline there of potentially being, a bit too low. Your free cash might be low, your DTI might be a little bit on the borderline of being high. So let's have a look at it, see if there's anything we can do, and then you can be confident then that is okay because it's been referred. And obviously if it was to show red, it means no, we're not happy with that, and it's not, it's not in line with our policy for free cash, DTI, etc. We always use net for our affordability, so it's always net income, which can obviously is different to some other lenders, and quite often they use gross. We can accept different types of benefits as well, and as I mentioned previously, we can accept second jobs as well. Most provable income types we're quite happy to accept. I suppose that leads me on quite nicely to things that we're planning in the future. So although the income and expenditure is a standalone document at the moment, and introducers will access our products on an online portal, or potentially they're API'd into our system, the INE is always a separate document. It is an Excel spreadsheet. However, we are working on a system called Tandem Connect, and we're actually currently trialling it at the moment. Trialing it with our internal sales team, and then we will trial it with just one potential preferred partner to trial it with, see how it goes, and then it will be live to everybody. What this system will do is make it easier for brokers. The income and expenditure whole affordability assessment will be built in. It's going to be less touch points. The case managers in our office will be using the same system. There'll be similar to like an online chat on there, so you can obviously speak to people. You'll get a note on the case, you'll get an email notification to say someone's worked your case, someone's done an update on it. We're going to have home track built into it, so as soon as you put the deal on, home track's already done in the background. You don't have to go onto home track website and then do it manually yourself. Anything you're consolidating will be pulled through from the credit search, so it'll just be a case of looking through your credit ticket, ticking what you want to consolidate. So it's going to make the process, even faster, even slicker, and just even better from a whole customer journey point of view. At Tandem, we also feel it's really important, to educate people, maybe students, children, in how to manage their finances. How many people, yourselves, when we were back at school, you don't learn anything about this. You don't learn how to manage your credit file. You don't learn how to get a mortgage. So we have an education bus that goes around the country doing presentations, sessions with adults, with children, students, and just, giving people the knowledge that they haven't got in order to, to get a mortgage at an early age. So I think sometimes what younger people tend to do is they get the first job, and then they potentially go and get themselves a car at £400-500 a month, and then they don't understand that actually then in a few years' time, if you've still got the car, it can then obviously can make it harder to get a mortgage. So it's a really great thing that we're doing, and you've probably seen us maybe on LinkedIn with photographs and things of what we're doing. We're always obviously expanding greener initiatives for customers, through our product offerings, through our home improvement loans. We're also obviously expanding our first charge proposition, which I'm sure you've probably seen on LinkedIn. With Roger and the team. We're also growing our instant online savings book. So you may or may not be aware, we do have one of the best saving rates in the country. Not too long ago, Martin Lewis mentioned us on one of his programs that he does. We didn't have a clue he was going to mention us, and he did do, and told everybody on television that we had one of the best saving rates. And then obviously you can imagine the next day the phones absolutely blew up, exploded, but we had no warning. But again, if you've got any customers out there or yourselves, you might want to have a little look at our savings, because it is a great thing. And then, as always, we're always looking to enhance our second charge proposition, making things better for customers and brokers alike. I hope you've obviously enjoyed listening to me. I hope you found some use in the products that we have, the products we've got to offer. And if you do want to access these products, we have a relationship with, we've got an agency with Tony. It would be that you have to put the business through Tony. That's who we've got our relationship with. Tony and the team are really great. They'll be there to answer any calls, and then obviously if they need us, they can ring us, and then hopefully, we can all work together. and get some
Sadie,
pink and
thank you very, very much for that. I learned some stuff there that I didn't know about your products, so which is always good. I just mention one thing. At this moment in time, their product range is this. Obviously, Sadie today was talking about regulated second charges, and they do have, as she's mentioned, a regulated first charge product. They're not yet in the buy-to-let market, and they're not yet in the bridging market. So some of the questions that have been asked, that would probably answer some of them. And I think also, so I'm just going to quickly run through these questions. So Mohammed said, do you lend both regulated and unregulated? At the moment, it's just regulated, as far as I'm aware, correct?
Yeah.
Good, just making sure. I was out for a week, so just to go, things change quickly and sometimes we're not told. Alex asked, is it an equitable charge or is it consent? As Sadie said, they would take an equitable charge. And then Uber's actually asked a question, do you have a minimum income home ownership level to lend on ex-council flats? So if you've got a block of flats with 99% rented, one owner, would you lend in that situation?
So say it again, because I don't
so
say it again.
Block of 20 flats, 19 of them are rented from the council. One is now owned by the borrower, and that borrower is looking for a second charge.
Yeah, that would be fine. Yeah.
Okay.
We don't have any minimum requirements.
Okay. Steve, I won't ask your question because that's regarding buy-to-let, but give us a call afterwards. Mark has said, looking at 1 month mortgage history, where do you stand on the day one valuation? So if you've got somebody that say bought a property for 300 grand, and then after 1 month they're looking to raise a second charge because they've made their first payment and it's worth 320, where do you stand on that?
So if they've just purchased the property, then we would go off the purchase price for the first 12 months. However, if you wanted to go out there and get a full valuation, then that would obviously supersede the purchase price.
Perfect. Excellent. Okay. I don't need to mention Mike's power cut because he's then asked a question. I have a client who had a significant drop of income, but is now on the up again. How would you treat the income for a maximum loan assessment? But he's entered, is it for a like-for-like remortgage? So Mike, that's a different product, Mike. So, yeah. But on the second charge side, if you've got somebody that's got a significant drop, had a significant drop, which a lot of people did during COVID, for example, for obvious reasons, and it's then gone back up, how do you assess, say the self-employed?
I'm going to say, we're talking self-employed here. So we would request 2 years proofs for self-employed income, and we'd also request an account certificate, unless they were a sole trader that potentially obviously did their own books. If they are a sole trader with no accountant, then we would request the most up-to-date. So we'd want the 2023 one that was obviously you could submit in April in order to get a true reflection of what's going on, providing the story behind why they've seen the drop. So obviously, if it was COVID, hopefully that's maybe filtered out now. Providing we can evidence this and the accountant can comment on this, then we would obviously take a unique view on it, a case-by-case basis. So we might do an average of 2 years, or we might look to go off the lower just to potentially obviously cover our backs in case, depending on the story and the situation of the case, really, Tony.
Every case. Every case that you refer, it's all about the story. That's something we're particularly good at, by the way, in presenting those. Martin has asked, what is your income multiplier on a second charge? And what is your debt to income ratio limit? Your debt to income ratio.
Yeah, so in terms of DTI, so we have different mandates for different amounts, and it also is different for loan amounts as well. And so it's very varied, but normally you're talking a maximum of 65%. In terms of minimum income, so it's work off net income, don't we? So it's a minimum of 1,300 for a single app and 1,600 net for a joint application, and that's how we work. Okay.
And Naya has asked a question. This is relating to first charge. I won't ask it, but probably best, Naya, thing to do after we finish today's show, pick up the phone, ring Kirsty in the office, and just ask her if she has a lender for that. She'll know pretty much straight away whether there's someone who will accept that level of arrears. But to say this is a second charge product that Sadie's talking about today. So, and this is a residential purchase you're talking about. So I think I should have actually clicked onto the next one, shouldn't I? About the questions. That's all we've got.
Yeah. Right, I didn't do it.
My mistake, because I was clicking on. I forgot to do it. Sadie, thank you so much. That was brilliant. Don't worry about the problems at the start. either with the sound and everything else.
Can you cut that out, Tony? So it's not going to be on my. I'm only joking.
No, that's actually going to go on our blooper reel that we're currently accumulating at the moment. So,
oh, that'll be good. That'll be good.
Yeah.
I'm all down for a blooper.
Yeah, along with most of the bloopers are me, to be honest with you. But anyway, thank you very much. Simon will remove you from the room. You can stay watching if you want, and we'll move on to our next speaker, who will just waiting on his slides to appear. And I know he's in the room because I know he's also, yeah, there he is. He's just about to appear any second. He's only in Watford, so it shouldn't be a problem. He's only 15 miles down the road, so there's no issue at all. There he is. So there's, sporting a new haircut, Tony. How are you?
I'm good, mate. Yourself?
Yeah, very well, thanks. Very well. Yeah, your head's in the way of your logo, so that's poor branding there. So if you can do the whole presentation like that, that'd be perfect. Right, okay. So here we have Tony Grillo. I've known Tony for donkey's years, honestly. Just since he was a child, it feels like. This Tony Grillo from Together Money, as I should probably call them. And you would have received this today. Tony's talking about the commercial finance product today. So we sent you their product guide, showing you the rates and everything else, and LTVs and all the usual stuff. A little bit about Tony. He's worked in specialist lending industry for over 20 years. In this time, he's undertaken a variety of roles from underwriting to internal sales through to his current position in business development. Tony has a broad range of experience and knowledge given the time he has spent working for lenders, packages and brokers. This has allowed him to provide his introducers with both product and market assistance. Tony is a long-suffering, I'm adding that in, that's not actually in the words, long-suffering Watford FC season ticket holder. Someone has to be. I think he's actually only one or two people that's got a season ticket these days. And in his spare time, he enjoys watching them play and spending time with his wife and 2 children. Now, his claim to fame is Tony travelled to New York on the same flight as Bob Geldof. They breathed the same air for 9 hours pre-COVID. And since then, he's lost the ability to sing and swears a lot. So, Tony, over to you. You've got 20 minutes. We're a little bit behind time, so no pressure. I need you to bring it back for me.
I'll express through then. So, morning, guys. So I'm Tony from Together, as Tony's just mentioned. I'm here today to talk about our commercial proposition. So we collaborate very closely with the guys at Specialist Hub. We are a packager-focused business, and what I'm going to run through today is the key USPs across our commercial product range. And when I say commercial, I mean true commercial property. A little bit about ourselves. So as I mentioned a second ago, we are very much packager focused. Our business comes in predominantly from our packager networks of professional packaging businesses like the guys, like Tony and his team. We've been lending 50 plus years. We've currently got a loan book of around £6 billion and growing. I have to keep checking this one each time I do this presentation to make sure I've got the right number, but we are currently well in excess of £6 billion now and growing. We take a common sense approach to lending. That means we've got flexible criteria. So what is written down in our criteria, guys, that we look at, there is always or often wiggle room there for us to make a common sense decision on lending. So there's nothing always set in stone. We can always take a view on any case, and that goes across all of our product sets. But when it comes to commercial, there's always tends to be some little quirks that we can look at and we can overcome and hopefully get a deal done for a client. We manually underwrite. Now, for me, that's hugely important. Being an ex-underwriter myself, there is no computer says yes or no. With us, it's a human that says yes or no, and hopefully we can say yes more than we say no. We've got several product sets, so that means there's something for everyone, including our excellent regulated bridging on first and second charge is absolutely storming out the blocks at the moment. But and what we look to do is when we say we will lend, when we look at a deal and when we turn around to Tony and his team and to all of our introducers and like to yourselves, when we say we will do a deal, we will do it. We don't like to sort of procrastinate on a deal and come back and say to you later on that, actually we've changed our mind on that. We look to assess the deal properly day one, as long as we've got all the relevant information in front of us, which the guys at Specialist Financial Services always present to us. I'm regularly speaking to their guys about cases that they're trying to place with us. They'll come to us with the ins and outs of it, the little quirks, the little ripples that might be in there. And as long as we've got all of that information day one, we can make a sensible decision, and we will not look to back out of that later on. We will look to lend if we've said we'll do that day one. So a little bit about the client. So what do we do? Why are we different? How do we operate? Well, client-wise, we have a minimum age of 18. We will look to then to self-employed and employed clients alike. We don't credit score, which again, it's that no computer says yes or no scenario. We have a 12-month adverse window, so we will only look back in the last 12 months of any blips they may have had. We will lend to foreign nationals, expats, first-time buyers, first-time landlords. We have a low minimum loan size, which is £50,000. So we're really great. I'm getting a lot of sort of noise out there at the moment that anything under 125, 150, there isn't really a home for it. We seem to be really the only home for that sort of low value commercial business. Tie that in with first time buyer, first time landlords, that type of business, we lap up all day, and we love that type of business. We will look to lend to people that have got a checkered credit history or no credit history at all. We assess each client and each case on its individual merits. So a little bit more around the basic criteria. We will do 100% funding if we've got additional security that we can secure against. So we will look at other assets they have in their portfolio or what they have. We will look to lend across those to leverage more money out for the client. We will look at all property types, which I'll come on to later in the presentation. We work off the 180-day vacant possession valuation. And we always require a full valuation on our commercial proposition. We don't look at AVMs as we do on other products. A bit about around income. We have absolutely no minimum income. A lot of lenders say that, and then there will be a caveat that there's a requirement for 12,000 for a single applicant, 18,000 for a joint applicant. We genuinely have absolutely no minimum income requirements. If the deal fits, the deal fits. There's no LTI restrictions, so we will assess on full affordability. We have various ways of calculating income on our commercial proposition. We have our standard ICR, but we will also look at the TSDI, which is the total secured debt to income, and we can look to support an application with additional income. We've got no maximum age if the case is self-funding. So we're very, very flexible in terms of the way that we look at income, and we can look at multiple income streams. We don't look at accounts. What we want to see is our accountant's certificate, which is you'll see in front of you now, which is a very, very straightforward document there. We'll look at the last couple of years. We'll look at the uncertified year to date, and we will also potentially look at a projected income for the coming year. So we're very, very flexible in terms of the way that we will look at income. The types of property that we will look at, we will look at all property types. So we will consider any type of property. If the property's got land registry, if it's a title there, we will absolutely consider it. We will do a day one remortgage. We will look at 65% maximum LTV on a purchase and 60% on a refinance. And we will look at unusual tenants, unusual leases, and all of those types of sort of situations. So any case where there's a quirk with regards to any aspect of the deal, we will look to make a common sense decision and see if it's something we can come up with a solution for. It may not always be the perfect solution, but we will come back and potentially try and offer something, because I always say something's better than nothing. And when it comes to the type of property, like I say, we will look at every type of property. Looking at some of the pictures up on here, semi-commercial properties, we'll look at those on a first charge basis. We will look at equine scenarios, farms, working farms, properties with agricultural restrictions, shopping malls. I've had a couple of shopping malls come through as inquiries recently. We're happy to consider those. Restaurants, pubs. Lands, we will lend a fairly rare breed that we will look to lend on land with or without planning. We typically tend to be around the 50% loan to value mark on that, but we do have an offering there, and I think it's something quite important that we have. So non-standard constructions, properties with vast amounts of lands, we will consider. A lot of lenders have an acreage sort of restriction on there. The only things that we don't really like to look at are properties that you can preach, teach, or play sport in. We're not a big fan of football stadiums. Having said that, we did consider a quirky one that had some land attached that had some development rights on it. So sometimes because we say we won't do something, it doesn't always mean it's always worth asking the question. I'll always ask the question of our underwriters who I'm not certain if it's a case that I've not seen before or a type. I'm always happy to have a discussion and have a conversation with an underwriter. And if I can sell them the merits of it, there could be a reason for them to consider it. Worst case scenario on any valuation on any property, we will look to lend 50% of cash value potentially. So we'll look at a valuation with poor comments, where the valuer has had a look at it and torn it apart, or if the value is giving it a nil valuation, we will look at something on there. We will look at a cash value and maybe lend up to, as I say, 50% on that. So we are very, very, very flexible in terms of the way we look at things. We did a bit of research last year into what landlords are looking at the moment, and we sort of come across that borrowers are looking to raise funds at the moment. It seems a fairly key thing to get the EPC levels on both their commercial and their buy-to-let properties up to the relevant standard to meet the regulations. And what we're seeing, I think clients are looking at all of their assets. Just because their buy-to-let needs EPC improvements, they may look to raise the funds out of their other commercial assets. So they'll be looking upon lenders like us that may look to be a bit more flexible on the use of the loan, the amount borrowing, the type of asset they're looking to draw those funds out to get all of their portfolio, all of their properties up to those EPC ratings. Because obviously, if a commercial property is let out, that will require to be up to a certain level of EPC as well. So there's varying ways that we can look at that and help your clients. Speed is a thing that we like to work, or we work very well with. So we have what we call our internal funding for a refinance. So if the loan's under 300,000 and they're refinancing their property, it can be done on internal legals. So that allows us to speed up the process, saves the client money, cost of paying for lender legals, and obviously the speed of getting the deal through, because the lenders are in-house for us, so it makes the process very, very swift. This is lending to individuals only. Unfortunately, this isn't available to limited companies. It's not for purchase or transfers of equity. It's purely on a refinance, and it's for properties in England and Wales only, because our solicitors are England and Welsh-based solicitors, not for Scottish. We do, however, as I probably should have mentioned earlier, we lend in Scotland, so we're one of few lenders that will lend across the border on a commercial basis. So there's yet another reason to consider together. And just in summary, three really important points here: speed and service. Like I say, we can be as quick as we need to be. Having the internal legals really helps. Having a very slick and manual underwriting process can really help us get things through. We're very well staffed. We've got over 600 staff, so we're very well resourced in terms of getting deals over the line. Flexibility, as I've mentioned, we will look at a deal on its individual merits. We don't just take a very straightforward overview. We're happy to tear the deal apart, have a look at it, listen to what the borrowers and the introducers' thoughts are on the deals. If there's an angle and I can present that to our team, then we will make a consideration on it. And the certainty of funds, if we say we will do a deal, we will do a deal. If we look at it day one, we make a decision on it, we want to stick with that. Assuming nothing significant changes throughout the underwriting process, then we will look to fund that deal. And we've got a lot of money to lend. Like I say, we've got 6 billion out there at the moment. We're looking to lend. The plans are to lend significantly more this year. So yeah, we're in a great place. Finally, time for questions.
Tony, wow. Okay, I've seen quick and I've seen quick. I thought you was on helium at one stage there. Your voice went so high. So, right, now, I've forgotten all about this. Obviously, one of the benefits of being an old git is that occasionally you forget things. And Together have very, very kindly offered to fund the prize draw this month. So, luckily, my head of IT just came in and gave me a list of attendees that are being qualified for the prize draw. So what you need to do, people, is when I give Tony calls out a number, I'll call out a name. You just need to say here, and you will then win £100. I can't even remember what. I think it might be an Amazon voucher. I'll be honest, I can't remember. Together we'll sort that will be sorted by them direct. They will send you obviously the link or whatever they do. So Tony, I need you to call out a number, please, between 1 and 78. Any number.
Number 8.
Number 8 is Charles Alexander of Henry Danell. Charles, are you there? You got 10 seconds. I know Charles very well, by the way, but Charles, are you there? quickly, just say here. Charles. Come in, Charles. In 3, 2, 1. It's going to be one of these. I called out another name, then Charles will say, I'm here. Right? No, Charles. Okay, because one of the things is you have to actually be on watching for... Oh, no, someone's typing. Someone's typing. I'm just going to let that person... Right, we'll come back to that. I'm going to ask a question. So let's come to your questions. There are a few that... Has there been any questions? No, there's not been any questions asked by the delegates. So I'm going to come to the questions that you set yourself, Tony. Where is the opportunity for Together in the commercial market with your higher than average rates?
So yeah, really for us, it's like I've mentioned all the way through the presentation. It's the quirky deals. It can be smaller loan size. So we lend from £50,000 upwards. Certainly in that 50 to probably 125, £150,000 space. There aren't really many, if any, other lenders at all that lend in that space. So we are very much in that lower end. We lend in significantly higher than that, but we seem to have a sweet spot down there. We'll lend up to £1 million plus, but certainly that 50 to £125,000 place, we seem to pick up a lot of business. First-time buyers, first-time landlords, we're happy to accept them. Expats and foreign nationals, again, they're kind of our USPs there, where other lenders are less keen, and certainly throw all of those in. A foreign national, a non-UK resident that's looking to borrow £100,000. We work really well in there.
Exactly where they fit at the moment. Like Shawbrook mentioned, Lee at Shawbrook mentioned earlier on, their minimum at the moment is £1 million. Yeah. That's the same actually for a couple of their sort of like major competitors. And quite simply, when we get a deal over for less than 150 grand and we're asked the question, what will the rate be? We're quoting Together. Yeah. Because there isn't really anybody else in the game at the moment for deals with the values under 150. So that's really, yeah. The other obviously opportunity is there's a reason why Together have got a book of £6 million. 6 billion, not 6 million, £6 billion is quite simply because that is for clients who basically couldn't raise that money anywhere else. And there's a huge number of people who can't go out to the wider market. And whether that's across commercial, buy-to-let, regulated, bridging, whatever, Together fill a massive hole in the market that is just completely underserviced. And by God,
across the board, Tony, more and more normal high street clients are falling into specialist lending across all products.
Exactly that.
We are seeing far more what you might perceive as normal clients coming to Together, which is so we are able to service those that the majority or more people that are falling between the cracks in the pavement on the high street. Yeah,
and as I was going to say, when they pulled from the market when COVID first hit, and my Christ, did we miss them? Really did. Everyone did. And they came back to the market, and they came back in a different way, which has made them more profitable. And they're writing more business than they've ever done before. So they're certainly doing something right. It's a professional, well-run, and fantastic outfit. If any of you have ever been up to Together's offices, it really is something to be seen. It really is. Someone's been typing for the last 2 or 3 minutes, but nothing's come through as yet. So I'll just ask your next question, and we might have to call the prize drawer again because he seems to have disappeared. What are the main advantages of using Together for commercial term?
I've probably really answered that in the previous question, to be completely honest with you. It's the quirks, to be honest with you. It is those first-time buyers, first-time landlords. Speed is great for us. It's the speed and certainty of funds. When you come to Together, if we say we do it, we'll do it. If it's a refinance and we can do it on internal legals, that saves the client money, that saves the client time. We can get a deal paid out. You're coming through professional packages like yourselves, Tony, and the others on our panel. You're coming to the experts. These are areas that we have historically been, yourselves and ourselves, known for being experts in these areas. But it comes down to that, the speed, the service, the flexibility, and the certainty of funds. If you come Together, you're going to get offered those all on a consistent basis and can be confident that we'll get the deal done. Yeah,
agree wholeheartedly. I really do. A massively valuable lender to us. And just some of the stuff, but it's not always for the customers who've got serious problems. This was some years ago, and it was before Together were called Together, is in one of their previous before they rebranded. I did a bridging loan for a very, very famous pop star, and who I had to go and meet at her house. which was quite nice for me. But that person was living in a massive multi-million-pound mansion, but because of the circumstances, she needed to raise a fairly small amount of money for something. I won't go into the full details, but a fairly small amount of money, and together were our only option. It wasn't any problems with actually providing ID and that sort of stuff, because this person was literally at the time all over the television, all over literally everything. But we got it through, and it was paid off 5-6 months later. So, right, there we go. Now, Eura said, and I've not read this question yet. So Eura has said, your valuer recently reported a zero valuation for a right to buy property valued at 275 by the selling council. Okay, this is really not, well, that's why I asked a question, because Tony might well know. It's valued at 275 by the council. Why couldn't you overrule the surveyor?
Without looking at the case, Tony, I genuinely wouldn't know. But it would depend what the comments are on the valuation. It depends if they've given a zero valuation. Is there a cash valuation? I don't know. It's without looking at it. I mean, I'm more than happy if they want to. I can have a look into it. It just depends what introducer it's gone through. So I may not be able to comment anyway.
You're probably best to whoever, because I presume it wasn't us. If it was us, let me know. But I presume it wasn't us. Go back to the packager that you used and ask them the question, because I certainly would have asked the question if this had been put on my desk. So hopefully it isn't one of ours, because I haven't seen it. But
normally put a cash value on these ones where they give a zero value for mortgage.
Yeah, I'd see the same.
I'd go and have a conversation with the packager and put a conversation together with the valuer and get an understanding why they've done that.
Yeah. So yeah, without more circumstances, it's a real difficult one to comment on. Right, Tony. No more questions. So I just need you to call me out another number, please. So anything between 1 and 78.
42.
42. Where are we? I know he's here because he's commented. Mike Hurd, are you there? Say here, Mike. Yeah, we got a winner. Right, but some money winging its way to you, Mike. So thank you very much indeed. The system did work. So, and this is where Charles says here. Right. Okay, Tony, thank you very much. We'll see you very soon, mate. Take it easy.
My pleasure.
And thank you for rushing through so we could catch up. Fabulous. And it's good that we can also see Together's logo now. You've actually sunk down in your seat, obviously, or there's someone behind you lifting the bloody thing up.
No, it's me. I've just
gone down in the chair. Right, okay. Nice one. All right, see you soon.
Cheers, take care.
Simon will remove you. Okay, right, moving on to the last bit then, people. And this is my bit. Now, I was wondering what to talk about today, and because normally what I've been trying to do recently is to cover any subjects that the speakers don't cover. But as the only subject that wasn't really covered today was regulated first charges, and I'd normally be talking about the products from Tandem and Together, I thought I'd probably leave that because I know Tandem is something that Roger will be talking about later on this month. So hopefully when he talks about the EPC situation, so that's something that will be covered at that stage. And I'd probably talk about Together's first charge product on a very frequent basis. So what I decided to do was actually do a repeat of last month. And the main reason for this is, as we've seen such a drop in affordability across borrowers, quite simply, second charges at the moment, the busiest part of our business is second charges because of people looking to raise finance for whatever reason. Let's face it, one thing I always say to my staff, doesn't matter how high rates are, people will always want to borrow money. When I launched back in 1989 on the second, I remember back on the second charge side, we had two rates on offer at the time, which was 22.6% and 25.6%. And they weren't, I believe were they the APRs? Yes, they were the APRs. So 22 or 25%. And the industry was never busier than it was then. I mean, there was some brokers writing 100 deals a day, literally a day. So you think over 2,000 clients a month from some of the larger brokers. So people will always borrow, but affordability at the moment has obviously caused massive problems within the remortgage and the further advanced market. We've seen, I mentioned that situation earlier on, that a broker's found himself in, that the client can't do a product transfer because he can't afford the cheaper rate, that even though he's paying 9%, he can't afford 6%. Well, affordability we're seeing at the moment, because there's less restrictions on second charges, quite simply, this is where there is not only servicing your clients, because as Sadie mentioned earlier on, if you don't do this, then they go straight on Google and they'll find someone else that does. So this is basically just covering a little bit of what I covered last month. So are you considering? I've now upped that to 17 lenders on the second charge side, shortly to be 18, and by the end of this month, end of this year, it will be 20. That's our lending panel at the moment on second charges. If you're using the Mortgage Club, you'll be lucky to have access to 4, and I mean lucky to have access to 4 as well. So don't want to steer you away from others, but if you want to give your customers the choice. And I've seen some horror stories over the past couple of years. I mean, there was one guy I saw on the Cherry IFA forum who was a mortgage broker who was placing all of his second charges directly with Precise. Well, at the time, Precise were trying to exit the market, were 2% dearer than anybody else on the prime side. So he was immediately putting his customer at a disadvantage. If a customer decided to make a complaint at some stage in the future, then who knows? But using a company that offers a whole of market, and we're not talking like the first charge market where there's hundreds upon hundreds of lenders. It's currently got 17, shortly to be 18. So it is something I really, really, really urge you to, if you're not doing this, to consider, because it is a big part. And the brokers out there that I'm speaking to, the competitors of mine on that cover, say, buy-to-let, commercial, that sort of stuff, the ones that are struggling are the ones that don't offer second charges. And there are quite a few of them. So as it says there, affordability, everyone's experiencing the problems of affordability but on second charges, much more relaxed. Multiples up to 6 times income readily available. But with the majority, well, it's actually 8 lenders there now, it should be 9 lenders, do not use income multiples at all. So there is no 6 times, there is no 4.5 times, there is none of that nonsense. And you tend to use ONS statistics, but in the main, if your ONS statistics are just completely wrong, which they quite often are, because let's face it, they are government generated, and we know what the governments are like on this sort of thing. Most lenders will allow them to be overridden if it's sensible. All right, if you've got a family of husband, wife, and 3 kids, and they're saying they spend £100 a month on shopping, that's daft. But some of the stuff, I don't know if you know, ONS statistics, for example, it's more expensive to have a mobile phone in London than it is in Newcastle. Did you know that? Well, apparently it is, which to me is absolutely ridiculous, because I can't see that people up north get a cheaper mobile phone than people down south. Or maybe they do. Security and loan values. Almost all security types are acceptable, and I do mean all. I mean, Sadie was mentioned earlier on about basically there isn't any restriction, tin roofs, that sort of stuff. The most unusual one I've ever seen, and I had the unfortunate experience of having to go and visit this guy because his home was very close to my office at the time, was a property made out of steel from a World War II warship, which this would have been about 1995. They did this, and you can see the rivets from the warships on the external wall. There was only 4 properties in the road like it. They obviously run out of steel. But unfortunately, a client that at the time, this was before 96 and what happened in Dunblane, he had guns all over the wall. He was probably the angriest man I've ever met in my life, angriest customer I've ever met in my life, and I couldn't wait to get out because I thought I was going to probably be shot dead if I didn't give him the right product. But we got that through. But even these days, that sort of construction isn't a problem. Really isn't a problem at all. We've got lenders willing to go up to 100% loan to value, sometimes even more. One lender's actually advertising 140%. At the moment, loan to value, and now 50% of our cases. You've heard the words or the AVM quite a bit today. Over 50% of our cases now qualify using a home track AVM valuation. So there's fewer delays. And let's face it, none of us want to use surveyors. We really don't, unless we absolutely have to. Because what does a surveyor do? Takes money, gets paid regardless. Quite often does an absolutely lousy job, and it's more often just a business prevention officer more than anything else. Who needs a compliance department, a lender, when you've got surveyors, eh? The fewer surveys we can do, the better, as far as I'm concerned, because it is an absolute godsend now that we don't have to send out surveyors to see every property. Adverse credit history, more flexibility, CCJs, defaults, IVAs, anything of that nature. Debt management plans can be left in place if they're up to date. If not, they can be repaid. Most second charge lenders do not credit score. So there's none of this nonsense because we've got lenders who are credit scoring, but also then saying that the minimum score on Equifax, for example, had to be 350. Well, that's a double credit score, really, isn't it? So you're credit scoring and then credit scoring. So we don't have that second charge. Most do not look at if they have a credit score, it's their own credit score. And debt consolidation, over 80% of certainly what we see, but certainly what the market sees is for debt, for second charges, is for consolidating existing debt. And we've all got borrowers at the moment who are really, really, really struggling. They've had years and years and years of low rates. They've taken out loans, unsecured loans, left, right, and centre. They bought new cars. They bought this. They bought that. They got new kitchens. They've got credit cards up to the eyeballs. All of a sudden, we've seen what we've seen with rates, and mortgage rates have gone up. So there's less affordability. Energy prices have gone through the roof. Less affordability. Now, all of a sudden, where are they? They're thinking, I don't know if I'm going to be able to make the payments on my credit cards at the end of this month. And these will be your clients. And if you're not in contact with them, someone else will be, or they'll be in contact with somebody else. So it is a major, major thing at the moment with regards to consolidating debt. Second charge lenders have all developed systems to repay the debt directly. Really important. What we don't want to be doing as an industry is someone comes to us and said, I've got 30 grand worth of credit card debt. The money goes to them directly, and they didn't just go and spend it on something. Because in olden days, I can remember one guy getting 20 grand and taking it down to the casino that night. And I can remember one other guy who got a 30 grand loan to pay debt, got the money direct, went out and bought a boat. Ridiculous. But the main thing is second charge lenders are there, and they're doing something that ensures your customer should be out of the woods and actually have some breathing space. So as it says there, this is the lifeline your clients could need. It really is something that you should be considering. And this last bullet point here, I remember back in 2001, the market was oversaturated with brokers. We had a lot of lenders, but there was a lot of brokers offering second charges, and it was getting quite difficult actually in 2001 to get enough business in. At that time, I was feeding a company that had about 130, 140 employees. And then 9/11 hit. And when it hit, I stupidly thought, oh, that's going to be the end. That's it now. The market's going to absolutely take a dive. Exactly the opposite happened. I think people just thought to themselves, do you know what? We don't know what's going to be happening in the future. So I'm just going to do those things I've been promising myself. I'm going to get that new kitchen. I'm going to get that new hot tub. I'm going to get my windows done. I'm going to do this. I'm going to do that. I'm going to pay for my daughter's wedding in Bali or wherever else they want to do it. And they started borrowing. And our business jumped up by a good 50%, literally within 2 weeks. And something we've seen post-COVID is something quite similar, in that people have thought, do you know what? We might not be around in 10 years' time. So let's do the things we've always dreamt of doing. So what have they done? They've racked up loads and loads of cheap debt, which is no longer cheap debt because of what's happened with interest rates, and they now need your help. So you know what you need to do. Buy-to-let second charges becoming more and more popular. We've been writing business for clients we've all been writing business for clients on buy-to-let first charges, rates of 2%, 3%, sometimes 4%. Fixed rates, yeah, you're not going to touch those, are you, at the moment, because you're offering the client something much, much more expensive. They come to you looking to raise money. What are you going to do? Well, we've got a range now of second charge lenders offering second charges on buy-to-lets. Top slicing is available from some lenders to make up for rental shortfalls. We've got one going through together, funnily enough, at this very moment that we've just had the stuff over for a guy who's a solicitor. But he's running his buy-to-lets. I think the rental coverage on the buy-to-let itself is about 110%. So we're just using his income as a solicitor to make up the shortfall. Sounds simple, but why aren't more doing it? I just really can't understand it. 8 lenders currently, from prime to major subprime. Use a mortgage club. You're lucky if you get 2 lenders on their panel. So again, it pays to actually deal with a company that knows this business inside out. And how we source our second charges, we don't rely on the sourcing systems because they're really not fit for purpose when it comes to second charges, because I think all 3 of them now, or certainly 2 of them, are dominated by one very large second charge broker. So when you go on, you're seeing their products and their fee structures. Our system, very simply, we developed our own in-house called Loan Quote. It's designed and updated by me, so I'm going to have a very busy afternoon because I think another lender's just changed some rates. So that's 4 so far that I've seen. So I'm going to be updating one lender on Loan Quote later on today, but go on Mortgage Brain and it's not updated for a week, usually. So ours will be done this afternoon. It's more accurate because it's been tested, and because I've actually written the thing in the first place, it means that I understand what lenders will accept. I understand where there's a little bit of leeway. You're not going to see that on the others, I can assure you. So, and as I said, it's updated sooner. This will be done. The changes that have been made today will be done today. If you want to advise on second charges, we've got a very, very simple process in place. Not everyone wants to. So you can just, if you don't want to advise, you just hand us over the client's contact details and we do what's needed. But if you do want to advise, and this is fairly unique, I think, well, I'm pretty sure it's unique, so I haven't heard of anyone else doing it. You get access to every lender in the marketplace. We do all the sourcing for you and provide all the paperwork for your compliance purposes. We instruct the surveys if they're needed and issue consent to second charge requests if they're needed. Package the case on your behalf, check all documentation, pay your income on the day of loan completion, as we always do in all cases, and there's no loss of control, but we don't charge a package fee. And on the bigger deals, we also give away a slice of the prop fee as well. Now, no one can beat that. Seriously, no one can beat that. So if your business model is you charge your clients 495 quid, then your client that you've had on board for years, he wants a second charge, you charge him 495 quid. If the deal's big enough, you get a bit of the prop as well, and you've got a happy client. You have the control. You hold total control. We don't charge anything up front or on completion. So I can't see that's going to be beaten in the marketplace if you want to give the advice. And what people say about the team, I'm not going to, this is normally where I take a little sip of water because my mouth has already started to dry up. But I'm not going to read all three of those. I'm just going to pick out one on the left-hand side. For a client to say about one of my members of staff, it is not an exaggeration to say you are a tremendous person. That's when you know you've actually done something that has actually changed somebody's life, which is what. And the fact throughout the process, her name is Kirsty, and he called her Christy, so he wasn't quite sure about her name. But I can't really get better feedback on that. Let's face it. But just say that's the sort of feedback. I could probably fill 10 pages of that just for the stuff we've received in the last 3-4 months. Second charge panel, literally everybody, as you can see, that's currently on second charge. Well, it is everybody that's doing second charges, and this is anybody I don't know about. With more to come, we've got one who is watching today that we are launching with very, very soon. Just waiting on the final legal stuff to be sorted, and then we're launching. So watch out for your emails because we'll be letting you know what the product is and what it can do. And also, how much do you get paid? We're still paying away 4% of the advance up to a maximum of 2.5 grand, paid on the day of completion. If we give the advice, if you give the advice, I've already mentioned, you keep 100% of the fee you charge. We don't take anything of it, and that comes to us. We pay you on the day of completion, always, if we have your bank details, of course. Regulated bridging loans. This is a massive, massive boom market for us internally at the moment because we're finding a lot of older borrowers are deciding it's time to downsize. I don't really want to be. I mean, look at my situation. Myself and my wife, all of our kids have now flown the nest, although my youngest keeps coming backwards and forwards from time to time, but they're pretty much all gone and now have families of their own. And we're rattling around in a big old 4-bedroom house that in the winter time we're getting electricity and gas bills of 700-800 quid. So we may downsize at some stage in the near future, but a lot of people are now deciding to do this. But because of the state of the market, this is where bridging comes into its absolute own, because it just means that your clients aren't relying on a sale to go through to purchase a property that might not be on the market for that long. So they're securing that property they want to downsize to, the perfect property for them. And if their property takes a little bit longer to sell, then so be it. They've got something in place so they can do it. We've got others that are looking to take a second charge to refurbish their home prior to sale. A lot of people are doing that. And loans can be used for almost any legal purpose. Usually, some lenders have some restrictions. But this is something where, I mean, we're getting a major, because you may only know, I don't know if any of you do regulated bridging. You might not know how many lenders are in it. So are you offering a fair market representation when you quote your client a bridging loan? Well, I'm coming on to a minute exactly who we deal with. But again, one of the major advantages we've got is that all of our bridging business, including our regulated bridging, is sourced by our own in-house software. Again, designed by me. Absolute nightmare, to be honest with you, to do. But the regulated bridging side was a little bit easier than the normal side. More accurate than what you got on the 3 main sourcing systems because it's updated sooner as well. And it's me doing it. So these are all updated as stuff comes over. Literally, as stuff comes over, everything else gets dropped and we get things updated. So we're not giving the wrong information out to our broker partners. There's our lender panel. So as you can see, that's currently, there is a couple I haven't put on there that are more on the private side, but these are basically our lender panel on regulated bridging at this moment in time. Some absolutely fantastic, a couple not so great. But sometimes you have to go to lenders because of a particular situation. You can't go anywhere else. So it is what it is. But that pretty much covers everything. Just seeing I'm doing on time, got plenty of time. Service that we offer is either packaged or introduced only. So if you want us to package and have no client contact, no problem. If you want to introduce the client to us and have no involvement and just get paid at the end of it, no problem. You decide. You don't have to just use either one or the other. You can use both across different products or across a product. You can package one, but we can package one deal. We can give the advice on the next one. Entirely up to you. You control it. You tell us what you want to do. That's what we want. That's what we'll do. And a little bit about why we're different. Not the products we offer. We offer the same as everybody else. The Bright Stars, the who else we got? I've gone blank on some of my competitors now. You know the ones I mean. It's not the products we offer. We occasionally get exclusives, very exclusives, and we've got one exclusive lender coming, as I mentioned, coming out next month. So it's pretty much not, but we all offer exactly the same. It's the people we employ. Now, you'll all deal with people on a regular basis. I mean, I've had to become involved. It's holiday season, so I've become more involved in cases in recent weeks. And I'm speaking to some lenders, and I'm thinking, how did you get this job? Really, how did you become an underwriter? Because you really do not have a clue what you're talking about. And that frightens the life out of me. That would frighten the life out of me if that's the way I ran my business. So I don't. I ensure that anyone, and I'm now advertising for staff, they have to have a minimum of 5 years financial services, specialist financial services experience, not working behind the counter at Nationwide. They have to be mature with life experience. It doesn't mean I discriminate against younger people, but they have to have some maturity because they need to be able to speak to people. And they need for the people that we deal with, whether that's customers or our broker partners, to feel confident that they know what they're talking about. That to me is absolutely vital. And when things go wrong, and we're not perfect, occasionally things do go wrong, they've got the ability and the foresight and everything else to know, to realize it early and deal with it, not brush it under the carpet, which I know that so many people I've had when I employed literally quite often anybody, we could give somebody a job if they could speak at one stage many years ago, and by Christ, it caused problems because you do tend to find something occurs and they think, oh, I don't want them to find that out. I won't tell anyone, and then it becomes a major problem further down the line. My staff don't do that because they've got the ability and the knowledge and know-how to realize that things don't go away. A little bit about our lender relationships. I've always banged on about this. A lot of the people that I grew up in the industry with back in the 80s are now MDs, CEOs of some of our major lenders. And it is relationships are absolutely key. Picking the phone up to the CEO of a lender because an underwriter's being a bit daft over a decision means the difference between getting a deal through and not getting a deal through sometimes. And that is something that money can't buy. It really isn't. It's absolutely vital to us as a business that the lender relationships I have with the hierarchy within the lenders we deal with. We take the prevention of compliance and the prevention of financial crime very seriously. The NACFB said we're a country mile ahead of all of our competitors when it comes to this on 2 occasions. Not our numerous awards from the financial press. Those of you who watched these before know my thoughts on the award system for brokers within the financial press, because I've seen far too many situations where somebody's just basically got an award because they put 20 grand's worth of advertising. And how do you compare one broker against another? It's not the customers comparing, is it? Let's face it. What else has been offered? Designated underwriter from start to finish. The only time somebody else gets involved is me when I have to get involved with solicitors, normally on the buy-to-let and the commercial and the bridging side. We've got one going through at the moment where there's 3 sets of solicitors involved because of various debentures, and you would not believe how poor these 3 solicitors are. I mentioned earlier they really should not be practicing law, practicing anything at all. Just to me, unbelievable. And they still want to charge the client by the hour. Commission is paid immediately on loan completion, as long as we have your bank details, and we will always do this. So some examples this year. What were the examples this year? 60th birthday. I took the day off. When was this? 6 weeks ago. I celebrated my 60th birthday, and guess what? We had completions. So I think we have 4, 5, 6 completions that day, all paid on the day of completion. My daughter's wedding 4 years ago, I paid brokers or broker partners in between her saying I do and me giving my speech. And when I renewed my wedding vows in Spain all the way back in 2018, I did exactly the same there, nipped off with my iPad and paid some brokers whilst things were just after I said I do again, pay some brokers then. We don't have a cash flow problem. I don't expect to pass that on to you. Quite simply, no commission clawbacks unless the deal turns out to be fraud, or unless the client cancels within the normal. Some lenders give a 14-day cancellation period, as we know. So if they do cancel, then we need to get the money clawed back and come back to us. But other than that, no, we don't claw back. Our products, pretty much everything. The only thing we don't do that's secured on property, we don't do any form of equity release. It's for the older borrower, older population. That's not really our bag. We've also introduced recently probate loans. So if you have any deals where clients are looking to raise money for inheritance tax purposes, or the last client that we did was looking to raise, just actually get some money from his mother's estate, which was going to take about a year or so to be realised. And he needed 150 grand very, very quickly, which we managed to sort for him. And his business is back on track where it should be. If you want to submit a case, either put something in the bottom there, and just we can come back to you. Complete a decision in principle form, which you can either download from our website, or we'll be sending out to you probably this afternoon, I believe. But you can also download our broker pack and the decision in principle forms. Go to our website, submit online, or just pick up the phone and give us a call. It's quite often the easiest way. I've got a couple of questions I'm going to come to in a moment, so which I will come to. LinkedIn, if you should have received, I've had my youngest son working in the office recently. He's not picking up the phone, so he's not speaking to anyone. But he's been sending that LinkedIn request for me to anyone that's signed up to date. If we can find you, if you've had a request, then please join me on LinkedIn. You can see what's going on. If you haven't had a request, then it means we probably couldn't find you. Maybe you've got a very common name like John Smith or something, and we didn't want to wait through 100,000 people to find you. But if you have got something, then please link with me, if that's the right terminology. If you like what you've seen today, you've already registered, but you've already registered to receive commission. We must have one of these back, because it's basically a rule that I have in place that we must have an agency agreement signed. If you do it online, you don't need to sign one. So if you do register with us online, then you've already covered all the terms and conditions, and it will be signed off, and we'll then normally get you approved in 2 to 3 hours. I'm just looking to see which slide I should start asking the questions on. Talking about our September, 14th September 23, we've got West One, Interbay, Pepper and Octane talking about all different products. So please join us then. And future shows after obviously the one in September, 12th of October, 9th of November. You can register for as many as you like. So yeah, they're all on the website. And the feedback and giveaways, what you will see shortly, and don't click on it yet, what you'll see shortly, because I'm going to answer some questions in a moment, is you'll see a little box appear. Click here to leave feedback. It will appear any second. You can leave the feedback and then download anything, sign up for future shows, and any of the downloads we've got, you can do there as well. It still hasn't appeared. I don't know why. So I'm just going to cover my questions. Simon, where's my link? It'll be there soon. Just a couple of things. Andrew Cooper said, would love to know how to increase my business with you, and ideas to get more business would be welcome. Andrew, maybe have a call this afternoon. I can give you some ideas. Depends on what you're doing at the moment, but certainly. Sarita said, what is the criteria of 100% LTV? Well, it's various lenders, Sarita, so it's a bit of a difficult question to answer, to be honest. So maybe, again, give us a call if you've got a particular scenario in place. We can cover it. Mike agrees with the surveyor's comment. And Uwe said, please send me some details of your loan quote software. Now, we don't make this readily available, because what I don't want to become is a Mortgage Brain 27 Tech or Trigold, if that's what they're still called. So we use it internally. We are looking for ways to incorporate it into our website at some stage in the near future. But with us being as busy as we are at the moment, actually trying to find time to get that done is proving to be quite difficult. But that is something that we intend to do in the future. So that box has now appeared, by the way, I've just seen. Okay. Right, CPD certificate will be emailed by close of business tomorrow. As I mentioned, please check your spam before you get in contact with us, though, because 99% of the cases it will be in your spam folder. Or unless you've signed up under a different email, which we sometimes find, and you're then expecting it to go into another email. It'll be the email address you signed up on that we send it to. Please help us out. I mentioned before, these are free to all delegates. They're also free for our lenders as well. We don't charge them for appearing. Which I know many do. We don't see this as a way of just increasing our profit. This is an educational tool for me, for everybody out there, more than anything else. And it's not something that I'm looking to monetize stage in the future. So please help us out by leaving a review for us either on Google or Trustpilot. Don't go onto Specialists Hub with a plural, because they are I believe a building construction training company. So nothing to do with our industry. Thank you to today's sponsor, Castle Trust Bank. Once again, thank you for everything, as always. Certainly one of our top lenders at this moment in time, as I mentioned in their presentation, a firm that only seems to employ people who know what they're talking about, which is a major advantage. Thank you for attending. Finally, enjoy the rest of your day. We hope to see you again soon. Thank you.